and gentlemen, humbly I ask that we all be seated and hold ourselves in readiness. Shortly we'll receive the gift of the occasion. It is requested that we place our phones on silent to avoid any interference in the course of this very short and impactful opening ceremony. Once again, the restrooms are outside. You may use the exit to my left or the one behind. The ushers are on hand to assist you. We have water to keep you hydrated and a health station outside should you feel unwell. Ghana Police Band will remain yours. And now, ladies and gentlemen, please rise for the Vice President of the Republic of Ghana, Her Excellency Professor Nana Jane Opoku-Agyeman, and the official party. The National Anthem of the Republic of Ghana. Let us pray. Unto you, O Lord, shall the gathering of your children be this day, the 6th day of May, 2026, here at the Destiny Arena of the Maker's House Chapel, where ours is a fruitful deliberation for 3 days on the next frontier, shaping Africa's integrated fintech future, as we deliberate on the 3I Summit 2026. Grant us thine presence and wisdom, that ours may be fruitful deliberations and actionable results for the continent and for the world at large. We ask all these of you, the great God of all nations, with faith and in thanksgiving. Amen. Please be seated. Excellencies, ladies and gentlemen, a welcome video to the 3i Africa Summit 2026.
What we needed was a room to brew ideas to full capacity, a room where policymakers make bold statements for the future, where the people building Africa's future can find each other to collaborate. In 2024, the Bank of Ghana, Development Bank Ghana, and Elevandi built that room. We called it the 3i Africa Summit. Innovation, investment, impact. What began as a convening is now a sustainable movement. Over 7,000 delegates, 80 countries, heads of state, central bank governors showed up and demonstrated the tenacity of Africa. In 2025, we convened again, this time to strategically align and connect decision makers. We did this approaching markets from Accra to Kigali to Singapore. The 3i policy dialogue demonstrated that cross-border payments through innovation can be easily enhanced. Fintech licensing passporting, digital public infrastructure, a continent finally aligned. Now, we deliver. 2026 is the year Africa's fintech shows the world how ready we are. That we are the next frontier. Cross-border payments that work. Digital identity that travels. Capital that finds the founders building this continent. Real money, real markets, real impact. This is the room where it happens. Welcome to the second edition of the 3i Africa Summit, Accra.
In 2024, we unleashed Africa's fintech and digital economic potential. That was the beginning. In 2025, we established One Africa, One Market and drove innovation, investment, and impact for a connected Africa. That was progress. Today, on the 6th of May, 2026, with all our powers combined, can we achieve success by establishing the next frontier to shape Africa's integrated fintech future? Can we? Then please say innovation, say investment, and impact. Welcome to the 3i Africa Summit 2026. And so live from the Destiny Arena of the Makers House Chapel International, right here in Accra, Ghana, at the center of the world, my name is Jerry Ajololo, and on behalf of the Bank of Ghana, together with its collaborators, the Ghana Interbank Payment and Settlement Systems, together with the Global Finance and Tech Network, let me say good morning and a warm welcome to you, our guest of honor, Your Excellency, Professor Jane Nana Opoku-Agyeman, Vice President of the Republic of Ghana. Musa Dukuli, the Directors General of the West Africa Monetary Institute and the West Africa Monetary Agency are here with us. We make welcome the Chief of Staff at the Office of the Vice President of the Republic, the Honorable Alex Segbefia, the Chief Executive of the Ghana Interbank Payments and Settlement System, our great collaborator, Madam Clara B. Arthur. Would you please make welcome from Singapore, the CEO of the Global Finance and Tech Network Solutions, Maha El Damaki. Thank you very much. Captains of industry, the boards, management and staff of the Bank of Ghana, GhIPSS and the GFTN of Singapore, heads of industry associations and organizations, distinguished delegates, members of the press, and the good and great joining us on radio, television, and online. We welcome you to this great gathering where ours is a mission to redefine how Africa invests, transacts, and grows. For 3 inspirational days, ours will be a labor of love for this nation and for the continent as we dwell on this all-important theme. Our opening ceremony is rather brief, which will take 4 very short keynotes culminating in the ultimate by our guest of honor, the Vice President of our Republic. Thereafter, we shall delve into a very spirited panel discussion bordering on our theme, and the day promises to be even more enriching with several breakout sessions you don't want to miss. Setting the tone for today, however, it is my pleasure to welcome us and show us how we can enforce Africa's next frontier in digital finance. Make welcome our gracious host, the Governor of the Central Bank of Ghana, yours and mine, Dr. Johnson Pandit Esiama.
Yeah. Excellency, the Vice President, honorable ministers, governors of central banks here represented, industry leaders and innovators, distinguished ladies and gentlemen, good morning. So it is a joy indeed to be here at the second edition of the 3i Africa Summit that is being hosted by the Bank of Ghana. And we are doing this in partnership with the Ghana Interbank Payment and Settlement Systems, GhIPSS, and the Global Finance and Technology Network, GFTN, of the Monetary Authority of Singapore. I commend the organizer to the policy dialogue that was organized last year. What is equally clear is that we are now at a point where progress must translate into scale, and access must translate into value also. Now, on the foundations of innovation, investment, and impact, our goal must be to ensure that these pillars are not only articulated, but effectively aligned through strong partnerships. And Africa is not starting from zero, therefore. We are starting from momentum. So this is progress, but it also signals a transition. Access has expanded indeed. The task now is to make it count. For a long time, this progress has been driven by mobile money and branchless banks to ensure that the financial system evolves in a way that is structured, that is predictable, and that is capable of supporting innovation at scale. However, the work ahead is not only about issuing laws, guidelines, or frameworks. It is about strengthening the service infrastructure around regulation. Processes have to be clear. Submissions must be trackable. Decisions have to be timely. This is how confidence is built. Confidence will also depend on the strength of our digital identity and our KYC frameworks. Weak authentication increases fraud risk, it affects credit quality, and it undermines trust in digital financial services. So the next phase will require stronger coordination across institutions, improved data quality, and more robust identity systems. We must also focus on the development of indigenous firms in this endeavor. Africa's digital finance ecosystem must not only grow, it must mature. Firms with strong potential must have access to the partnerships, capital, and infrastructure required to scale sustainably. A strong financial system is not defined by activity alone, it is defined by discipline, it is defined by transparency, and it is defined by competitiveness. So, ladies and gentlemen, the value of this summit will not be measured by the conversations we just have, but on the other hand, by the outcomes we drive hereafter. stronger alignment across markets, across the sub-region, better coordination across regulators, and faster progress towards financial systems that are inclusive, that are innovative, and that are capable of operating at scale. This requires deliberate action from all of us regulators, industry, and partners alike. And the question before us is straightforward. Will Africa simply adopt the next phase of finance, or will Africa help to shape it? That is the question before us. Africa has reached a point where participation is no longer the ambition. Leadership, on the other hand, is. The answer will depend on how deliberately we act, how effectively we coordinate, and how consistently we execute. So on this note, ladies and gentlemen, I welcome you all to the second edition of the 3I Africa Summit, and I wish you productive and impactful engagements. God bless Ghana. God bless Africa. Thank you very much.
It's a day after his birthday, and his leadership continues to inspire and shape a forward-looking sector for Ghana with clarity, experience, and empathy. Please help me celebrate the Governor of the Bank of Ghana, Dr. Johnson Pandit Isiama. Belated happy birthday, and may God bless and keep you always. Thank you for that foundational keynote on enforcing Africa's next frontier in digital finance. Excellencies, ladies and gentlemen, we now move to the impact of partner leadership in the future of digital finance. Here to give us that keynote is the Chief Executive of the Ghana Interbank Payments and Settlement Systems. Make welcome Mrs. Clara B. Arthur.
Good morning. Her Excellency, the Vice President of the Republic of Ghana, Professor Jane Nano Poku-Agyeman. Good morning, Madam. The Governor of the Central Bank of Ghana, First Deputy Governor, Second Deputy Governor, governors from other central banks, CEOs, our partners here, ladies and gentlemen. I welcome you all to this morning's session. It's a pleasure to welcome you to Ghana for the 3I Summit on behalf of the Ghana Interbank Payments and Settlement Services. This summit reflects a shared ambition for Ghana, which the governor has just spoken about, and for Africa, for us to build a digitally connected financial future anchored on innovation, investment, and impacts. For Ghana, it signals our commitment to digital finance as a driver of economic transformation. And for Africa, it represents an opportunity to strengthen cross-border systems that unlocks growth at scale. GhIPSS is a proud partner and the Bank of Ghana, as well as the Global Finance and Technology Network, to deliver this year's summit. Our participation is grounded in the conviction that Resilient infrastructure combined with strong and intentional partnerships is essential for the future. A few days ago, I always like to set and give some context when I have such an opportunity. A market woman in Makola, which is our commercial market in Ghana, for those of you who are visiting us for the first time, was asked how she preferred to receive payments. Without hesitation, she said, mobile money. She did not ask whether the sender was issuing from a bank account or a wallet. She simply expected to receive the money without delay. That expectation is the result of interoperability, enabled through collaboration between GhIPSS, financial institutions here, mobile money operators, fintechs, and the Bank of Ghana. What that moment represents goes beyond technology. It represents trust, access, and progress. And this underscores the focus of my remarks this morning, welcoming you all to this session, the impact of partner leadership in shaping the future of digital finance. Your Excellency, distinguished guests, when GhIPSS was established by the Bank of Ghana in 2007, the vision was for GhIPSS to lead Ghana's payment systems transformation through the development of interoperable infrastructure that connects all players in the ecosystem, reducing cost of delivering digital financial services. Today, the vision is a reality. Through platforms such as the National Switching and Processing System, the GH-Link, the Nobestic Card Scheme, Ghana's instant payment systems, mobile money interoperability, check code line clearing, direct and debit systems, we have built a connected ecosystem that enables seamless financial transactions across institutions. More importantly, we have done this in partnership with industry under the regulatory guidance of the Bank of Ghana, ensuring that our infrastructure continues to evolve in line with the needs of banks, fintechs, and service providers. Your Excellency, as the industry evolves, we recognize that sustaining this progress will require deeper collaboration and leadership guided by innovation. And this is why GhIPSS is taking deliberate steps to strengthen our infrastructure and support the ecosystem, working closely with our partners to advance Ghana's Cashlight agenda. And in this regard, we are migrating Ghana's national payments infrastructure to the ISO 20022 Global Messaging Standard. This migration is strategic, repositioning us for the future. And by adopting this standard, Ghana's payment systems will speak the same language as the world's leading financial infrastructure and markets, enabling richer transaction data and faster settlement. With the passage of the Virtual Asset Service Providers Act, GhIPSS is looking to collaborate with virtual asset providers to ensure we provide the required shared infrastructure that allows for innovation, growth, and regulation. Beyond Ghana, we remain committed to collaboration across Africa. GhIPSS is ready to connect with other instant payment systems across the continent because the future of digital finance lies in cross-border interoperability. Distinguished ladies and gentlemen, as the infrastructure provider, we see our role as an enabler to provide the rails upon which our partners build solutions that expand access, drives usage, and deepen financial inclusion that impacts the financial health of every Ghanaian. In closing, Your Excellency, the story of digital financial services in Ghana is at the core a story of leadership and partnerships. It is a story of institutions choosing collaboration over fragmentation, shared progress over isolated successes. This approach has transformed our payment ecosystem, delivering faster transactions, broader access, lower costs, and stronger trust across the industry. GhIPSS remains committed to deepening these partnerships, working closely with regulators, financial institutions, and fintechs to continue enabling innovation and growth. To conclude, it is always important to state, when leadership is collaborative, partnerships are intentional, digital financial services moves beyond systems and delivers real impacts. And it ensures that every Ghanaian like the woman I mentioned in Makola, has access to financial services. And that is no longer a barrier, but it's a given. I wish us all today a successful and impactful summit. And once again, Akwaba to Ghana, and have a good session. Thank you very much.
Ladies and gentlemen, Madam Clara B. Arthur is the CEO of the Ghana Interbank Payments and Settlements Limited. Please put your hands together one more time. Thank you for the impact of partner leadership in the future of digital finance. As a matter of fact, this lays the foundation for our next keynote on future-ready fintech, lessons from Africa and Asia. But the Vice President has to take leave of us, so we'll jump straight to her keynote. Oh, Madam. Ladies and gentlemen, with joy in our hearts, let's please make welcome the gift of the occasion, the Vice President of the Republic, as she delivers the final keynote on shaping Africa's integrated digital economy.
Please respectfully take your seats. Please allow me to refer to the protocol established and to say good morning to everyone. Good morning. Thank you very much. On behalf of His Excellency John Dramani Mahama, President of the Republic, it is a pleasure to welcome all of you to Ghana and, of course, to Accra. I hope it's not your first time, and if it is, it won't be your last time. Welcome to Ghana. Distinguished ladies and gentlemen, for decades, Africa has been described as a frontier, often by those looking in. What matters now is not so much how we are described, but how we organize ourselves to compete, to integrate, and to build at scale. In that light, another label, that of Ghana as a gateway to Africa, must make clear that a gateway is not just a title. It is a system measured by whether transactions clear, businesses connect speedily, and markets operate with certainty. Ghana's position rests on decades of political stability, a commitment to openness, and a decision to host the Secretariat of the African Continental Free Trade Area. Today, it is not only about proximity to ports or the volume of goods that pass through them, but also who builds the rails, sets the rules, and can sustain confidence in an evolving economy. It was Dr. Kwame Nkrumah who reminded us that Ghana's independence must be linked to the total liberation of Africa. It is still valid. Economic sovereignty now also depends on integration, particularly digital integration, because this is where value is created, exchanged, and controlled. From traders to smallholder farmers to software engineers, participation increasingly depends on the ability to transact, be identified, and operate across borders. Africa has already demonstrated her capacity to leapfrog legacy systems, mobile money, digital identity,
and financial technology have shown what is possible. The task is to move from pockets of progress to continental scale. And the integration of our digital economies requires these 4 things: payment, identity, regulation, and of course, infrastructure. First, payments. In many cases, intra-African transactions are still routed through financial systems outside the continent and denominated in third currencies. This adds costs and delays and undermines the very idea of a single African market. Through platforms like the Pan-African Payment and Settlement System, some progress is being made. The AfCFTA Digital Trade Protocol, adopted by the African Union Assembly in 2024, provides a framework to reduce this friction through mobile money interoperability, cross-border electronic processes, and integration with regional settlement systems. The objective is for a Ghanaian enterprise to be able to invoice a Guinean client and receive payment in cedis directly, efficiently, and at a reasonable cost. Second, identity. No digital economy can function without trust, and trust begins with identity. Today, large numbers of Africans remain without verifiable digital identities. This excludes them from formal systems and limits their ability to engage cross-border trade. Interoperable identity systems are therefore essential to unlock participation at scale. Third, regulation. Integration does not require identical laws across all countries, but it does require compatibility. Fragmented regulatory environments increase the cost of doing business and discourage innovation. The Digital Trade Protocol provides a basis for alignment, but this work must be carried forward with discipline. Regulatory sandboxes, shared standards, and practical coordination between jurisdictions will make integration real. Fourth, infrastructure. None of these ambitions can be sustained without the underlying capability. Too many Africans remain offline due to cost, coverage gaps, and skills gaps. Africa also represents a small share of global data center capacity. This has implications not only for performance, but also for sovereignty. If our data is stored and processed elsewhere, then even when we participate, we lack control. Investment in broadband, cloud infrastructure, and digital systems must therefore accompany regulatory and policy alignment. Distinguished guests, without disregarding the challenges before us, we must still seize the opportunities. Africa is the youngest continent in terms of population, and technology adoption is accelerating. The next phase of global digital growth must be shaped in emerging markets. Africa is well positioned to play a defining role, particularly in cross-border trade and in applying technology to agriculture, health, education, and public services. Ghana stands ready to contribute to this effort to ensure that integration is not only discussed in Accra, but also demonstrated everywhere. And I believe you agree to that one. Thank you very much. To that end, allow me to announce a concrete step. Ghana will work with everyone, Rwanda, Zambia, and other partners, to pilot a continental digital trade corridor. This pilot, which will be implemented, tested, and measured, will focus on mobile money interoperability, mutual recognition of digital identity for cross-border KYC, and harmonized electronic invoicing. Distinguished guests, the systems we build will determine whether Africa participates in the global digital economy on her own terms or operates within frameworks defined elsewhere. And integration will be achieved through systems that work consistently across borders and at scale. The work before us is what we know we can do. And I welcome all of you once again to Accra, and thank you for your kind attention.
Ladies and gentlemen, the Vice President of our Republic, Her Excellency Professor Nana Jane Obokwajiman. Your Excellency, the Vice President, would you be kind as to please stay with me as I invite to join you for a few photographs some of our principals. Ladies and gentlemen, please be seated. Humbly, I invite the Governor of the Bank of Ghana, together with his two deputies, followed by the CEO of GhIPSS, and then our partner all the way from Singapore, please make welcome the GFTN, the Global Finance and Tech Network Solutions, a subsidiary of the Monetary Authority of Singapore. The second photo would include all governors and deputy governors of sister African countries. And finally, representatives from our sponsors, MTN and Jomo. Please join for the last photo. We shall have a final photo later on with all our sponsors. But for now, I ask that we all rise as we observe the national anthem of the Republic of Ghana and see the Vice President of our Republic off. May God bless you, the Vice President of the Republic, for gracing this occasion for us. May God bless us all. Please remain standing as the Vice President and her party take leave of us, after which we shall continue with the rest of the program. Ghana Police Band, we're all yours. Please be seated. Excellencies, ladies and gentlemen, thank you very much for being with us for the first part of the opening ceremony. We still continue. Just gone by was the Vice President of our Republic, together with the Governor of the Bank of Ghana and the CEO of GhIPSS, laying the foundation on the theme that we're reflecting on today. It now falls to our partner, I'm talking about all the way from Singapore, the Global Finance and Tech Network Solutions, to also lay another foundation to our reflection today. Would you please make welcome to speak to us the CEO of this great organization, yours and mine. Okay, she'll join us shortly. Right after this keynote, we shall have a fireside chat with our partner MTN. It will be virtual on the screen, and thereafter we shall have a panel discussion bordering strongly on the theme that we're reflecting on today. Thereafter, we shall break for coffee and tea, and when we do come back, we shall be shown our respective breakout sessions. Today, we have 3 breakout sessions which will be running concurrently, and our ushers are on hand to assist you to your relevant stations. Ladies and gentlemen, there's enough to keep us engaged for a full day, and I pray that we all commit our attention to make sure that we achieve the objectives we've set out to. Excellencies, ladies and gentlemen, it would have been very appropriate for us to have a foundation from the lessons from Africa and Asia before we delve into the final keynote by the Vice President of the Republic. However, we can still reverse the process and gain actionable insights from this theme. Here to walk us through the future-ready fintech, make welcome the Chief Executive Officer, GFTN Solutions, Maha El Damaki.
Honourable Governor of the Bank of Ghana, our gracious host. Honourable Central Bank Governors, Deputy Governors, CEOs and distinguished guests, ladies and gentlemen, good morning. It's a real pleasure to be here in Ghana with all of you for what is bound to be a very productive 3 days, full of insights, intelligent conversations and discussions that can move the African continent forward when it comes to the 3 I's. innovation, investment, and impact. There is another I that I would quite like to add actually here, and that is implementation. We heard about it already in the previous speeches. Something that we are hearing is needed in this new age of new innovative technologies descending upon us at a pace and a speed we haven't seen before, and potentially, having the ability to rewire how we live our lives. But Africa is no stranger to innovation. In fact, in the past, this continent has shown us how to embrace innovation and to leapfrog legacy systems, and indeed to be a model for the world. From mobile banking that enabled financial inclusion for everybody to agent banking that reached remote areas of the continent, this progress has been impressive, and it's one that we've all learned from. And in fact, many other jurisdictions have taken a leaf from your book. So, statistics speak for themselves. You can see on the screen. 66% of global mobile money transaction value is from Africa. Sub-Saharan Africa has the highest number of adults with mobile money accounts. So what is next? Well, of course, everyone is talking about artificial intelligence and the possibilities of AI improving productivity, creating new opportunities, and solving perennial problems that we haven't been able to solve before. The impact of it is on healthcare, biosciences, manufacturing, and of course, financial services, and that's just to name a few, and that impact can be significant. So for Africa, and according to the African Development Bank, this could be a $1 trillion opportunity in 2035, and that is an increase in GDP. The urgent yet responsible deployment of AI has the potential to create 40 million jobs by 2035. Even in conservative estimates, it is predicted to increase GDP by $250 billion. This is a significant opportunity that cannot be missed and certainly cannot be ignored. The good news, though, is that the continent is already seeing developments that are making an impact using AI technologies. Here in Ghana, companies are building facial recognition software that can support digital identity, but using more diverse data sets, and therefore it's much more appropriate, to the context, adapting to local requirements. Also, AI in Ghana has been used in payments to improve access and services. It's been used across the economy, in fact, in areas of farming, pharmaceuticals, and other industries. And it's not just the case in Ghana. It's actually the case across the continent. Many governments are setting their AI strategy for their countries, and there are many cases across various industries, and indeed in financial services, we are seeing a lot of use cases using AI technologies, where we see applications that enhance the user experience and reduce costs, such as chatbots for customer service, or those that reach wider markets in investments and savings, such as robo-advice, or lending and credit facilities for a wider market, a wider target market, such as AI for better credit scoring, where you could use more diverse data sets and reach more target markets, such as the informal sector and MSMEs. Or indeed applications that enhance the integrity of the financial system and protect consumers, such as in the areas of fraud detection, compliance, and risk management. All these and more make services better and more accessible, and they build on what digital infrastructure there is today. So this is the good news, but there is more to be done. And here are some interesting data points. The Oxford Government AI Readiness Index suggests in 2025, Sub-Saharan Africa had the lowest average digital skills score. North Africa and Middle East were one cluster on the index, and they were tracking against world average, around 40% or so. But let's be clear, this is not the entire story. The development of AI is indeed uneven across the continent. There are some excellent forward-looking initiatives across the continent that I've spoken about and that you've heard about through the earlier speeches. But many still grapple with infrastructure, with governance, and with skills shortage. And I believe, even though there's a lot to be done, I believe that this is the opportunity for Africa to take a leaf from its past and act today, and this can be done in a few ways. First, and by the way, all of these are interconnected, they go hand in hand. First, policy and regulation to support new technologies. How is the regulatory environment supporting financial innovation ambitions? How are you supporting firms wanting to innovate? Is regulation an enabler or a blocker? And how can innovation support the right use cases, knowing that there are risks and we need to balance the risks and innovation? Innovation has to be balanced with risk management, and that is the role, the difficult role, I should say, of regulators around the world, not just in Africa. There are different tools to support this. And in fact, the FinTech Foundation, led by Chris Brummer, CEO, who's here out of Washington, DC, identified that there isn't a benchmark to assess the regulatory readiness for financial innovation across various jurisdictions. And so they're taking the lead, and GFTN partnering with them on developing the FinTech Regulatory Futures Index this year. You'll hear more about it throughout the conference and hopefully throughout the year. And that's just one tool. Each jurisdiction can conduct its gap analysis against international benchmarks, against its peer jurisdictions, or indeed against its own ambitions. And that way it can create a roadmap for how innovation can be embraced in the right way and for the context of that jurisdiction. Second, infrastructure and experimentation. Unlocking the potential of a technology that is moving rapidly, it comes with risks, but it has tremendous benefits, needs the right infrastructure. And I'm not just talking about hardware, software, data centers. These are very important. But also the governance frameworks, the risk management frameworks, the public-private partnerships, and the experimental test beds and sandboxes that can allow for experimenting to uncover these risks. They're novel risks, so trying to understand what they are, but in a safe environment. But also innovation hubs, incubators, accelerators, all to encourage responsible development, yet at pace. And then the third is very important. It's upskilling and capacity building, from creating talent pipelines to institutional knowledge and skills. Capacity building has to go hand in hand with any strategy for financial innovation. And in the case of AI, understanding what these models' strengths and weaknesses are, what they can and cannot do, and what are the trade-offs that come with the various models. All this is critical for us to ensure that we know when we need to make the decision and not the machine, that we understand the role of AI agents, that we understand when the machine is hallucinating. And these are just a few of the problems that we need to look out for. Also, we are the domain experts, and no model comes with domain expertise inherent in it. And so the AI can only work if it is combined with domain expertise. So if we take all of these, and all of these three points together, we can cut through the hype, and we can confidently engage with the technology because we know that we are in control. So this is the continent's moment to innovate, to invest, and to make an impact by implementation. Everyone has a role to play, from public sector to private sector and academia, and we at GFTN hope that we can also play our role. So at this moment, I would like to thank our wonderful partners, the Bank of Ghana and GhIPSS, for making this event a reality. We're proud to be partners with you. Let us use this opportunity for all of us coming together, and let us collaborate with each other to turn these insights into action, into execution, thus delivering the 3 I's: innovation, investment, and impact. And let's not forget the 4th I, implementation. I look forward to being part of these discussions, and I wish you all a very successful conference. Thank you.
Please help me appreciate one more time Madam Maha El Damaki, Chief Executive Officer of the Global Finance and Technology Network, for that great expose, the future-ready fintech lessons from Africa and Asia. And she's given us the 4th leg to our contemplation. Ladies and gentlemen, when we talk innovation investments, we talk impact, what's the next? Everybody, put your hands together, you were listening. And so now that we have a good overview of some working examples in Africa and in Asia, wouldn't it be nice if we have the full picture of how finance works in emerging markets? It will be proper to lay the foundation before we hear from our governors as they walk us through this conversation on regulating the next frontier, central banks, and the next frontier of digital finance. And so for 11 minutes, please, let's watch this fireside chat, The Future of Digital Finance in Emerging Markets. It's a conversation with the CEO of MTN Group, Mr. Ralph Mupita. Please lend your attention to the screens.
Here in Ghana, and the 3i Summit is very happy to welcome the Group CEO of MTN, Ralph Mupita, to this fireside chat on the future of digital finance in emerging markets. Hello, Ralph. Thank you for joining us today at the 3i Summit.
No, thanks very much for having me here, even though we're having a virtual fireside chat, and looking forward to hearing how everything has gone in the 3i Summit. Really, I couldn't be there physically, but this is as good as it gets in our digital age.
Wonderful. We're talking about the future of digital finance in emerging markets. How excited are you to be here today, Ralph, and how important is this topic at this time?
The topic is super important. We are seeing the speeding up of the digital economy across the world. We see advances in AI in particular, fast track what we thought was possible in 5-10 years' time. These things are happening today. As one thinks about kind of the digital economy and its expansion and its pervasiveness across the world, the timing of this conference with the focus on digital finance could not have been more important. There is an enormous opportunity for us across Africa to be able to leapfrog some of the challenges that we face through leveraging the benefits of the digital economy and digital finance.
So for years, we've spoken about financial inclusion. From where you sit today, what tells you that Africa has moved from access to now building real digital financial systems?
I think we've gone through, probably the last 15 years of mobile money development across markets, whether it's, you look at the progress that's been made in Ghana, progress made in other parts of Africa, particularly in East Africa, is we've seen mobile money evolve and become more pervasive across markets, user acceptance, and so forth. There's been a massive transformation. So if you look at GSM data sets and you look at kind of the transaction value for mobile money systems in particular, globally it's about 2 trillion. And Africa is a big part of that 2 trillion of mobile money across the GSM markets, or the markets that GSM reports on. And that's, in the main, what we've been experiencing has been P2P, transfers, cash in, cash out. But we're at the point where I think we're about to see a more digital form of financial inclusion. Historically, this has rested on USSD-based technology. It's been based on 2G handsets and the services that I spoke about. But I think as you look forward, we're in the middle of a transformation for digital finance that's happening right now. I think we will find that this digital finance will happen on smartphones, not 2G phones. We're going to have a much more amplified experience, so much more app-based digital finance opposed to USSD. I think you're going to see more nano lending, so-called fintech. You'll see more remittance. You're going to see more payments. You're going to see stable coins being part, or crypto being part of the ecosystem. So we're at a point of transitioning from mobile money system to true digital finance. And I think it's going to be very exciting, and it's going to be a powerful accelerator for growth for African markets.
So you just described the way digital platforms are now deeply embedded in financial services. But from your experience, what is it that the telco-led platforms bring particularly the traditional financial models struggle to deliver?
I think traditional financial models struggle in a couple of domains. I think the first is the capillarity of the business models of traditional finance, the ability to get to the end user at a cost to serve that is, affordable to the user. We're talking about, $1 to $2.5 average revenue per user across the African markets that firms like such as ourselves can the traditional banks and insurers would not have the capacity to get so close to the customer. So the leveraging of the distribution and other systems that telcos have, I think, is enabled to create reach and access to where the truth is. And I think that's going to be super exciting because I think it will really fully democratize finance on one. And I think it becomes an accelerant for economic growth. You are bringing people into the ecosystem to participate in the economy more formally, and the transactions you can see as possible. And I often make reference to India as a very interesting market to see the power of the digital economy to drive the economy forward. And I think we have across our African markets a similar opportunity to really accelerate, particularly in the youth knowledge that we're seeing over the next 2 to 3 decades, where the bulk of the workforce from the world, or for the world, will actually come out of Africa. And digital finance is a big role to play.
Ghana has taken some important policy decisions recently, and I know you're Ghana, I think it was in March, and I know you love Ghana. But from an operator's perspective, what do you need to see from regulators to encourage long-term digital finance?
I think the first thing is we need regulatory certainty. An environment where the regulations are clear and they are forward-looking. The regulated developments will obviously focus on the prudential requirements, capital requirements, for driving finance forward. But I think they need to be equally matched by protecting the consumer. I think we need to enhance trust in the system. There's a global phenomenon that we're dealing with right now around fraud and scams and the need to protect consumers. So I think all of that as an ecosystem is required to really enable a very vibrant and very responsible acceleration of digital finance across our markets.
And Ralph, you know that you guys summit has go from dozens of countries, cross-border payments, big topic, regional trade all the time. What would really need to change for Africa to move from national success stories to truly regional digital finance?
I have a vision, and I'm sure that the vision is not too far into the future, which says that digital economy and digital finance is what will truly democratize and remove the physical boundaries that we have across our African markets. When you think about cross-border payments, you often have to think about how to convert local currencies into our currencies like US dollars, etc. To have a transaction. We must envisage and enable a world where a lot of the work has been done around thinking about ease of e-commerce, ease of transactions more globally. And I know that the African Exim Bank and other institutions have done a lot of work to really pioneer kind of payments across Africa, and they're almost frictionless and at scale with limited friction. So I think that world is upon us right now. And the world we're living in and the issues that we're dealing with in current times should be a call to accelerate those efforts to try and make the African continent, at least at the digital economy level, have less boundaries, less borders, and enable transactions to flow within a very safe and secure ecosystem. So I think we're not very far away from that today, and we must encourage it.
But on the more serious note, AI is doing a lot of things, right? Fraud detection, AI is being used for this, credit scoring, customer management. From your perspective, Rob, Where can AI make the biggest positive difference in digital finance in emerging markets? And what responsibilities come with such power?
My point of view is as follows. I think firstly, the use cases for AI as we know it, it's a fast evolving foundation of technology. But I think there's some no-brainer use cases here, such as fraud detection you spoke about, this is about inspiring trust into the system, and so forth. And I think there will be new use cases that will emerge over time as the technology advances to more powerful AI systems. There's also the use cases around customer service, and that must be done responsibly. But I think at the same time, we need to be thoughtful around the risks of AI in of itself. I think there's still human intervention required between the bookends. Digital finance must has as its foundation trust. So and that trust must survive human and AI agentic systems into the future.
Finally, what's the one thing you want every leader in this room to do differently in the next year to advance digital inclusive finance?
The main issue is that the ability for digital finance and digital ecosystems to prosper and really drive socioeconomic progress is that we need to, as we're doing at the summit, is to bring our minds together around creating the balance I spoke about, around enabling innovation and protecting the customers. If we can do that, I think we're going to see exponential growth and creating social conditions that will make Africa super prosperous in the broader sense of what prosperity means.
I think the message is clear. Digital finance in Africa has reached scale. The next chapter is about at least three things: resilience, trust, and of course, regional integration. And that can only be built together. Thank you, Ralph and Peter, for talking to us at the Breakout Summit.
Much appreciated. Thank you, sir.
And thanks for watching. My name is Bernard. The Breakout Summit continues.
Excellencies, ladies and gentlemen, a very candid conversation with insights on the role of telcos as financial platforms, the regulatory shifts shaping the market, and how emerging markets can leapfrog traditional banking models to build more inclusive, resilient financial systems, and the role of AI. Help me celebrate once more the Ralph Peter, CEO of the MTN Group. And although he's not here, he's represented by the Senior Vice President, MTN Group. Make welcome Mr. Ebenezer Chumasanti. Thank you for joining us, sir. And so this sets the tone for this all-important conversation on how we can focus on regulatory frameworks, policy coordination, and institutional approaches that support innovation while ensuring stability, trust, and system resilience. It's about regulating the next frontier, central banks, and the next frontier of digital finance. Would you please make welcome my panelists? First, the Deputy Governor of the Central Bank of Zambia, the Honorable Reka Shifue Mahango. It's my pleasure to welcome our second panelist, the Deputy Governor of the Central Bank of Rwanda, the Honorable Nick Barija. We make welcome, ladies and gentlemen, the Governor of the Central Bank of Tanzania, the Honorable Emmanuel Mpawa Tutuba. And of course, our gracious host, the Governor of the Central Bank of Ghana, Dr. Johnson Pandit Esiama. We are honored to have the Director, Office of the United Nations Secretary General, Advocate for Financial Health, Madame Tamara Cook, to moderate this panel. Please make her welcome with a round of applause. Madam Moderator, your panel.
Thank you so much. It is such an honor to be here with you, governors. Each of you has been a leader in what we're talking about today. I am here on behalf of Her Majesty Queen Maxima of the Netherlands, who is not only the UN's Secretary General's Special Advocate for Financial Health, but she is also the chair of the International Advisory Board of the Global Finance Technology Network. So she's wearing several hats, and I'm here representing her. I think hopefully your team shared with you the questions. If not, we'll see what they have to say. But as we get started, I think I'd love to build on what we've heard this morning already. We've heard about a fourth eye of implementation, but perhaps that third eye that's here, the last eye, is the most important, because we need to innovate. We need to have the investment that comes with that, and we need to implement. When we unlock innovation, as all of you have done in your countries, we see the results. When we have predictable regulation and supervision, that unlocks innovation, that also leads to investment. But all of that must be underlined by what happens at the end of the day. What is the impact on our economies? What is the impact on the families that live in our economies, on the communities that they live in? And so we saw some statistics this morning around how many people in Africa have access to formal accounts and have access to mobile money. And we saw the number 40%, which is from Global Findex, but all of your countries have much higher penetration of mobile money. And I think that is really a testament to your leadership and unlocking that innovation that we've been talking about. I took down all the numbers of all of your countries, but I might leave it to you if you'd like to do that. And I think I'll just move to our very first question. So what I would like to hear from each governor, and we'll start with you, Governor, since you are our host. How are fintechs in your country? And when I say fintechs, I think fintechs can be an institution type. It can be a solution inside lots of different kinds of innovation. So feel free to speak about any use of financial technology to deliver innovative financial solutions. How are they helping citizens in your country? Can you give an example of how a fintech is helping citizens manage day-to-day, deal with risks, and/or invest in their future, which is how we think about financial health? Governor Asiama, let's start with you.
Yeah, thank you very much. So fintechs, for me, simply, these are technology firms that are helping to deliver financial services to the people. For our country, for example, yesterday I was looking at data in terms of the number of branches of banks across the country. I was looking at the geographical location as well. And it's clear that fintechs have a role. I mean, there are 16 regions in the country, and I saw a couple of them where number of branches are still really, really low. And so in terms of access to finance, we cannot depend on the traditional, providers of financial services. Thankfully, technology works. Technology goes to every corner of the country. There's been a lot of momentum in the last 5 years, started around the last 5-6 years, and particularly in the last 2 years. We are beginning to see services by way of digital credit. We are seeing micro-insurance, and there's a lot of momentum. So for us on the regulatory side, our approach has been, just as I mentioned earlier, to play a facilitating role, even as we watch out for the guardrails. Even though financial stability is our number one consideration, how can we better facilitate the activities of fintechs? We are looking at the regulatory environment. We are looking at what is next. We are looking at what more they can do. Personally, my passion is about tokenization, because I'm linking it to how I can get Our diaspora, we have lots of Ghanaians in the diaspora. How can I get them to invest in country? Because those flows, I need them for my balance of payments. And so the last time I met with the CEOs of fintechs, I was challenging them. And I told them, we have to do this. Help me to drive investment, through tokenization in country. It's only fintechs that can deliver. So these are some of the considerations in Ghana. We can talk more about more details later on in the chat. Thank you.
Thank you, Governor. Let's move to you, Governor Tutuba. Tanzania has really played a role in lots of different kind of innovations. Can you give us some examples from Tanzania, how fintech has helped people really improve their financial health?
Yeah, thank you very much, Madam Moderator. And I would like to take this opportunity, first of all, to express my sincere appreciation to my brother, Governor Johnson, for the hospitality that you have accorded to me personally, as well as my delegation from Tanzania. Yeah, so for the fintech in Tanzania has been considered as a critical platform where even in our Vision 2050, we have provided a specific slot to recognize a fintech as a part of enablers to development aspirations. So even in our 5-year development plan as well, we have taken note of the fintech, because we usually consider these fintech as a key platform which continue to expand the services and enable other key players in the economy to use different financial services and ensure even to access different platforms. And remember, in 2023, we conducted a FinScope study where we observed about, by then, 76% of people were included in the financial services. But after that now, we observed there were like 5 groups whom seemed to be financially excluded. Then these were like women, especially in rural areas, people with a disability, youth, especially those below 18 years, smallholder farmers and fishers. So then we put in place a comprehensive arrangement where now key players in the financial services, we agreed to develop different modalities to reach out to those people. And for now, we have seen, especially in the remote areas where these fintechs have continued now to increase accessibility, usage, and availability of financial inclusion of financial services to different segments of the population, including underserved communities. So in terms of these services, we have seen there are different platforms where a number of key players are offering insurance services. Some of them, they can have access to payments of these bills, or even for merchants, they can have access to the normal payments. And for us as a central bank, during the after that analysis, we realized that there were a number of mobile money service providers who used to have expensive services. So we decided to develop, we call it a Tanzania Instant Payment System, because in Tanzania we have 6 mobile companies. Now, cross transactions were somehow expensive. And when we developed the TIPS, we call it TIPS in abbreviation, means a Tanzania Instant Payment System. We have now enabled it to lower some transaction costs, because we provide that service for free, and you can now, it can enable one service provider to reach out to another service provider by using their mobile phones without additional costs. So by doing so, currently we have now came up with a number of products. For example, we have M-Pesa, where a person can enable to transact for payments of merchant and the other normal utility bills. For example, we have MBIMA. BIMA means insurance. Person now can reach out or can pay their insurance services without additional cost from one platform to another. We have Empower, where if you want to maybe to transact, if you don't have enough credit, enough balance, still you can get an additional. Of course, it's in a form of credit, but you can still transact it through for particular transactions without having any challenges. We have, for example, as M-Pesa, where a person can pay normal bills without any challenge. So there are a lot of issues where we have seen fintech being able to easy and ensure all those transactions being channeled through without having any challenges. And just within 3 years, we have now seen the level of financial inclusion has gone up from 76 in 2023. As of December 2025, we have now reached the level of 83% of financial inclusion, because each key stakeholder had a number of initiatives that we agreed, all of us, even the government committed itself that they will ensure to electrify the entire country. So all the villages, Tanzania will have about 13,000 villages. So the government has already electrified all the villages. Internet connectivities has already reached all the villages. And up to this moment, I can say that we are in a good move where we have continued to embrace and ensure fintechs are being used by everyone in Tanzania. Thank you very much.
Thank you, Governor. Let's move to you, Deputy Governor Barige. Give us some examples from Rwanda. What are you seeing that fintechs are doing to really help people beyond payments for these other services?
Thank you. Good morning, everyone. And let me also take a moment to appreciate the Central Bank of Ghana. Governor, thank you for your leadership. From Rwanda, we appreciate the collaboration that we have with the Central Bank of Ghana. Now, coming to what we are seeing in Rwanda, I want to share that from onset, fintech is no longer evolving. It's embedded in Rwanda. It's embedded in the way we live our lives. It's embedded in the way people transact. It's embedded in the way businesses run. Now, you asked how beyond payments. I was just looking at statistics that we have at the Central Bank of Rwanda, and when I look at total loans, new loans issued as of March 2026, close to 40% of the loans being underwritten by banks using and partnering with fintechs. 40% of new loans issued have been issued using fintech. And that's commendable. We are talking about moving beyond innovation, investment, impact, and now implementation. So it's good to see that we are enabling using fintech to see how businesses transact, to see how intermediation is being done. And 40% is a milestone. It's something that we find commendable. Now, I want again to speak about implementation. In Rwanda, we are seeing that fintechs are moving beyond borders. And it's why I wanted again to commend the Central Bank of Ghana. In the second Inclusive Fintech Forum, we signed an MOU with the Central Bank of Ghana to see how we facilitate. And this speaks again to implementation, because we are seeing fintech moving beyond borders, whereas regulation is still fragmented. And together as two central banks, we are working to see how we facilitate a fintech in Ghana to come and operate in Rwanda, how a fintech in Rwanda can operate in Ghana. In the Inclusive Fintech Forum that we had in February this year, we've extended it. We signed an MOU with the Central Bank of of Kenya. So my expectation is that we continue to create this coalition of the willing of central banks to be able to facilitate fintechs that are working beyond borders so that we can have harmonized implementation. I think those are the two use cases that I would want to share at the moment. Thank you.
Thank you, Deputy Governor. And last but certainly not least, it's nice to have two women on each side of the panel. Deputy Governor Mango, how are you seeing in Zambia that fintechs are delivering value for your population, managing day-to-day, dealing with risks, investing in the future?
Thank you. Thank you for the opportunity. And again, I also want to add a special recognition to the Bank of Ghana. I think they've set the tone in this area of fintechs. We have learned quite a few lessons as well from Zambia. With regards to fintechs, I think the drive has been, and the growth has been exponential in Zambia. When we look at where we're coming from, where we're at, and obviously focus is where we're going. We have seen growth. I know when COVID came, it was very destructive. But out of that, I think a lot of good things have come with regards to fintech development and also how we have evolved as an economy. We are seeing now fintechs as one area that is really tied to economic growth in Zambia and also helping the underprivileged and also the underserved economy to be part of the whole financial ecosystem. We recently published our financial scope survey of 2025. And in that survey, it shows that mobile money usage rose from 58.4% to now 76.1% over 5 years. And you'd agree with me that these numbers are really quite, it's showing a growth path. And again, between 2025 and between 2020 and 2025, the number of active electronic wallets doubled from 8.6 to 17.2 million. And I'm talking about a population of slightly over 20 million. So in terms of the inclusion agenda using fintechs, we do have the statistics, we do have the numbers to show that this is an area which is really on a tangent of impact and ensuring that we don't leave anyone behind. Fintechs have really evolved in Zambia. I think as alluded to earlier in earlier speeches, we have fintechs now offering savings, credits, insurance, pensions, and also investment tools. With the informal sector, we do have, for instance, daily loans where a marketeer is able to borrow, buy goods, and then also sell those goods and be able to pay back the loan. I think this has also seen us increase the number of growth in terms of MSMEs, as well as ensuring that the financial health of different households now is at a different level. So all in all, I think with regards to fintechs in Zambia, this is an agenda which from the national level to also central bank, we have seen exponential growth. And we are working on a regulatory environment that will enable this innovation to continue without leaving anyone behind. Thank you.
Thank you. What great examples we've heard about how your countries have moved beyond payments to offer many other solutions to your populations. I think the penetration of those services still lags behind that of the accounts and the payments. And so I hope next time we're together, we'll be at the similar levels where everyone is using the savings and credit and insurance and pension services to really help them. And that's kind of one of the challenges before us. So I shared with you that the next question I'd like to ask each of you, and this time we'll start with Tanzania to mix it up a little bit, it is what is one policy solution you have implemented to enable what we're talking about today? And what's one challenge or one surprise you're currently facing? And it's okay if you don't know how to solve it. That's why we're here together, to help solve these problems together. So one solution and one challenge, Governor. I'll start with you, Tutuba, and then we'll come to you.
Yeah, thank you very much. Of course,
I'm innovating by, mixing up the order. Is that okay? Go ahead, Governor.
yeah, thank you very much. Of course, in Tanzania also, Bank of Tanzania usually acknowledges often these are financial innovations that have been moving faster rather than even beyond the normal regulatory and supervisory frameworks. So we usually looking forward to see how we can strike a balance, because as a central bank, our core mandate is, among others, is to ensure financial stability. But now, during the course of these innovations, we need to strike a balance between financial innovation and the consumer protection while we proceed with our normal obligation. That's where now we usually find different ways to address these challenges. But in the current situation, we developed we established the fintech regulatory sandbox, which actually enables innovators to test financial solutions in a live environment within a limited space of under the supervision of the bank. As of because we have about 3 years now since we established the fintech sandbox. We have witnessed about 63 innovators, and we created like an incubator where we also provide some funds to support those new innovators and the startups. And I remember about 2 weeks ago, I approved the 3 products just to enter in the market. So we have been striking a balance based on our mandate, but at the same time ensuring that those innovators who are coming out, they can come up with their products and enter the market without creating any challenge. So one of the key challenges that I can have witnessed as of now is the limited access to financial data, because it seems there is a mistrust between these new innovators and some of the maybe financial users or those who can provide the data. So in different times, when these new innovators come up with their products, there are people who are hesitating to provide those data, or they can even scare to accommodate them in their normal platforms. We have seen even in the universities, for those who are pursuing ICT programs, when they are applying for maybe field for studies, there are some companies that are hesitating to take them. They can feel that, okay, once they invite them in their good institution, they can hack some data. So there is like a mistrust, but we have continued to support them and ensure at any period of time when they can have data. For us as a central bank, sometimes we provide our own data in a special guidance to test their products if they can meet the needs of the market. But up to this moment, I think the most critical problem is aligning on access of data. That's what I can contribute at this moment. Thank you very much.
Great. Let's move to Rwanda. Can you give us one solution you've implemented and one challenge you're currently facing?
Thank you. In terms of policy, it's been around the need to ensure that innovation matches with trust. So with the Central Bank of Rwanda, a couple of things that we've done. One, appreciating that financial inclusion in Rwanda is around 96%. But when we further look into the data, we see still a gender gap. Now, the Central Bank of Rwanda has been at the forefront of creating financial literacy that is targeting women. And we've been moving around the country, creating awareness, but also financial awareness, but also creating transparency. And we introduced a digital tool that we call Gereranya to enable users to be able to compare pricing of financial products across different institutions. That's one thing I would speak to. Now, in terms of challenge, as I mentioned, we see that innovation is moving beyond borders, but regulation, it does not. So that's the challenge that we see in Rwanda, that we are grappling with. We are reaching out to peers, central banks, and saying, how do we address this? How do we facilitate this? And we appreciate the collaboration that we have with other central banks in trying to address this challenge. It's ever growing, and yeah, it's a challenge we're dealing with as a central bank. Thank you.
Great. Let's move to Zambia. One solution you've implemented, one challenge you're facing.
In terms of one of the solutions that we've implemented in Zambia, obviously we saw the need that it was important that there was interoperability and also reduced market fragmentation. I think like GhIPSS, Ghana, we do have our national financial switch, which is really at that level of ensuring that we have seamless payments across persons, banks, and also wallets. With this innovation, I think it has allowed the space to grow, obviously with having at the back of the mind the need for consumer protection, as well as safeguarding the other issues of cyber fraud. So this has made it very convenient for the consumer. I think we've also seen high usage in this area and the reduced usage of cash, together with other interventions in terms of digital financial services awareness that we carry out countrywide. I think like Tanzania, the regulatory sandbox has also helped us. It was implemented in 2021, and we have tested 4 fintechs, which have actually proven that it's important to have that controlled environment before you actually roll out certain products and services. Then one of the challenges that we are currently grappling with is this, the growth in virtual assets. I know a number of our sister central banks have made headway in this area by coming up with regulation. I think this is an area where we are still at infancy. We have frameworks, but we're yet to have strict regulations on how to grapple and handle this issue. So one of the areas that we're looking at as we look at this challenge is how can we have a phased approach, and in terms of how do we get to regulate this space. So those were my 2 opportunities, what we have done in terms of the policy issue and also what we're grappling with being virtual assets. Thank you.
Thank you so much. And now let's come back to our host. Governor, what is one policy solution you've implemented, one challenge that you're grappling with now?
Yeah, so, you know, one area we've always sort of looked at where we think fintechs can help is to do with private sector credit provision. If you look at the data in real terms, you would notice that we've been lagging behind our peers. We are doing just around 10% of GDP. Our peer countries are doing 3 times that, others are doing 5 times that. So it is in our interest, you know, through fintechs to increase private sector credit, you know, microcredit schemes and the likes. But we noticed that there were abuses. There were all kinds of, you know, harassment by people who defaulted and the likes. And so recently we had to issue a set of guidelines, you know, to clean up the space. We believe that the guidelines will help to streamline activity. But you see, it leaves another challenge. What we noticed is we also have to scale up on knowledge of financial technologies. There is some level of illiteracy when it comes to, financial technologies. And so we will need to do a lot of financial education across the country. Even to do with the financial technology itself. Our people out there to be able to use the smartphones, to be able to operate them in ways that they won't take advantage of them. So yes, we have, introduced those guidelines and directives. We expect it to work, but we've also noticed that there has to be a lot of financial education. I believe we can win that also. Sometimes I just observe our market women, playing with their phones. And I'm hopeful that we can train them. We can enhance the level of literacy among the rural folk. It will go a long way to help, where young people out of school can access credit on their own. They can try their hands. People who have gone to learn trade can buy little tools to set up their own shops. It is something that the central bank is interested in pushing. But clearly, it's emerging that we still need to address the problem on other fronts.
Thank you, Governor. I feel like we could spend the rest of the day talking about the issues that all of them have brought up. Please, yes, join me in thanking for that. We've heard about price transparency. We've heard about education, digital literacy. You said playing with your phones. The evidence shows that learning by doing is the best way to learn, right? So giving people opportunities to learn about finance, to learn about fintech when they need it, where they want to use it, when it's actually adding value to them. That's how you increase that literacy. You talked about stability. Evidence shows that when families are more financially healthy, it also increases economic stability. And so it doesn't have to be a trade-off, right? It can be mutually reinforcing. The issues around frauds and scams and regulation across borders, so many different things. We've also heard so many excellent things from the opening speeches and fireside chat. So I'd love to give each of you opportunity if you would like to respond to anything any one of the other panelists said or one of the speeches this morning. I think we have a little bit of time. Does anybody want to react or respond to anything you've heard today, this morning? Go ahead, DG.
I think there's something the CEO of GhIPSS mentioned, and Madam, it's really stuck with me. The example you gave of the woman in the marketplace. As I feel, and this is to everyone here, the challenge that we have before us, mainly for fintechs, is to think about that woman. I feel the focus needs to be on the value, not just the valuation of fintechs, to keep in mind households and small businesses, to say how do we create value, how do we sustain trust. I feel those are themes that are emerging here that I wanted to speak to affirm that the fintechs that are in the audience need to constantly bear that in mind. What's the need in society that we are speaking to? How do we address it in a way that it creates trust, in a way that it creates transparency, in a way that it creates impact? Thank you.
Great. Anyone else? Go ahead, Governor.
Yeah, thank you very much. I have taken note of the sentiments made by Her Excellency Vice President during the opening remark when she mentioned a number of key issues. And as I spoke earlier that in Tanzania, we took on board some different issues and we had a very good arrangement where different key players, we sit together in the same room and try to brainstorm and see how we can enhance this fintech to become as enablers of other economic activities. And in our case, based on what Madam Vice President spoke here, was on the moment where the government and other key players can put in place good regulatory framework, and the other key players, either they can support in different ways, including the issues of infrastructure. Because for Tanzania, I saw when the government made a commitment to electrify all the villages and ensure network connectivities be available throughout the country. We have the government made a commitment, allocated resources, and has really made it. And you have seen now, that's why I said in my area discussion that just within 3 years, we have seen financial inclusion has increased by almost 7% from 76 to 83%. And all those whom we found to be financially excluded by that time, we came up with specific arrangements which now took them on board. And with the collaboration with other key players, they come up with different products that were really targeting those groups. So I hope in terms of expanding services to ensure that everyone is not left behind, we can just make it by incorporating all key players in this journey. Thank you very much.
Go ahead.
I think what resonated for me was the presentation by the partner from Singapore. I think there was a lot of statistics that was presented to us this morning. And it got me thinking that, yes, we are making a lot of strides. We have the right leadership, I think, in Africa to go beyond in terms of improving the financial health for the continent, for all our people. I think what also struck was the need for us to leverage on AI tools to just get that data, and from the data create or implement policies that will help us on this agenda, so that we have an inclusive without leaving anyone behind, and also just to ensure that as a continent, we look from within and we connect our systems within us to ensure that even on scale, in terms of costs, that is reduced as we innovate more products in the financial technology journey. Thank you.
Great. Governor, any reactions?
Well, listening to some of the speakers, it's clear that fintechs have a huge role to play. First, in promoting financial inclusion, generally, whichever services. And we are looking forward to listening to the experiences of our peers. We want to see what we can do more beyond where we are currently. But we're also interested in the role of fintechs when it comes to cross-border payments. Rwanda has confirmed we have an MOU with them. We are looking at other MOUs as well. There's a session for governance. There's a roundtable just for ourselves. We want to see what more we can do. So we are open. We are open. We think that through technology, through fintechs, we can achieve some of the aims, some of the things that have eluded us for so long. We can use fintechs to accelerate that. But of course, as central banks are, we cannot compromise on our financial stability goals. We'll keep our eyes on the guardrails, but at the same time, we'll work with fintechs. We'll look at our regulation. With us, I was discussing with my head of fintech the other day, and I said, you know what? I want to have a separate legislation for fintechs. You know, we regulate them currently under the Payment Systems Act. And I said, no, can I see more dynamism? Can we have a separate law just for fintechs? So that's the idea, thinking about what next, what more can we do? How do we, extend the boundaries? And for me, that is what this conference is about. We are open to learn. We are open to share ideas. Thank you.
And congratulations on your partnership, on the collaboration on the passporting. Hopefully by the end of this session, we'll have more of these examples. You'll have inspired more of this kind of collaboration. Governor, I loved what you said in your speech, which was, access must translate to value. We have to make it count. And I think that conversations like this are a good example of this. Well, I think that we are running out of time. I prepared you to try to come up with a soundbite that you'd like to close with. I often find that sometimes it's nice to just have something succinct at the very end. So as you gather your thoughts to remember what your kind of last parting shot is going to be, I asked you each to think about how would you like to challenge the next generation of fintechs to deliver more value or impact, that I from the 3 I's, in your country. Let's start at the end of the row with Zambia.
Inclusion gains alone are not enough, so resilience and long-term well-being must improve. I think the challenge for fintechs is to move beyond scale and speed, and also to focus more on impact and use ultimately. Thank you.
Excellent. Please, yes, I think that deserves a hand clap. Rwanda, let's hear yours.
Something that the Vice President mentioned, I think the challenge is to fintechs. As you scale, it's important to recognize that trust is your most important infrastructure.
Great. We've heard a lot about trust this morning. Tanzania.
Yeah, thank you, Anna. From my side, I see the challenge might be on building trust and confidence, because throughout, at the moment once you want to transact, you need to have trust and confidence on the systems that you're really using. But now, sometimes citizens may lag behind from these products, and you have seen a number of startups and innovators. They come up with the products with the assumption that everyone is confident to read, without even testing the level of understanding, the level of knowledge of the users. So when they are developing these products, they need also to think on the way users can have access to it, and avoid some sort of fraud and cyber risks, because for users, they may continue to hesitate and have feelings that probably they can lose their money. So the issue of trust and confidence in the products that are used to be developed, I think, is also key. Thank you.
Trust and confidence. I think those are 2 important words. And finally, our host, what would you like to leave us with?
Yes, so for us, it's about innovation. It's about identifying the problems we have as a country and designing solutions to these. And I believe it is a consultative approach. We have to talk to each other. So last week or so, or 2 weeks ago, I met with all the fintechs CEOs. We had breakfast together, and we had a good time listening to them and they listening to us. And I told them from now on, every quarter, we will have 1 breakfast meeting just to listen.
Too often, I find that innovation is for innovation's sake. And what you talked about is understanding the problem first and then bringing the solutions. And I think that is so important and such an example for fintechs. Well, it has been my honor to be with you on this panel and to moderate this discussion. As I said, I think we could keep talking all morning, but please join me in thanking this fabulous panel on the frontier of fintech.
And help me thank our able moderator, Madame Tamara Cook, for such a masterful moderation. How about a group photo right there in the middle? And that has been a very robust conversation on regulating the next frontier central banks and the next frontier of digital finance. And shortly we shall have a presentation on inclusion, but before that, let's appreciate our partner, the Ghana Interbank Payments and Settlement Systems, with a video.
Every day in Ghana, millions of movements unfold, powered by something greater. But behind every tap, every transfer, there is a system working quietly in the background. This is where GhIPSS comes in. Ghana is about payment and settlement systems, the backbone of Ghana's digital payments ecosystem, powering interoperability, connecting banks, fintechs, and institutions, enabling seamless transactions across platforms.
Welcome to the world of GhIPSS. GhIPSS was established by the Bank of Ghana in 2007 to partner financial services industry to develop and manage efficient and secure payments. Our role is simple, yet critical to Ghana's payment transformation. We provide interoperable infrastructure that connects banks, fintechs, mobile money operators, enabling them to deliver digital payment services to their customers.
GhIPSS is an enabler, a trusted infrastructure built to connect everyone. At scale, the impact is undeniable. Millions of transactions processed daily, a rapidly growing digital economy, an ecosystem expanding across every region. GhIPSS is not just enabling payments, it is driving financial inclusion, fueling innovation, and strengthening trust in the system, empowering fintechs, supporting financial institutions, creating opportunities for millions. And the journey doesn't stop here. GhIPSS is ready to connect beyond borders, to integrate with switches across Africa, to power the future of payments on the continent.
The future of GhIPSS is to be the enabler for its workers. We will continue to deepen our role as Ghana's digital public infrastructure, powering seamless, real-time, and interoperable payments at scale. We will build resilient, reliable infrastructure that enables banks, fintechs, mobile money operators, as well as digital asset providers to innovate and expand their business. Ultimately, GhIPSS will remain the platform connecting the ecosystem, driving inclusion, efficiency, and the future of digital financial services in Ghana and beyond.
Ghana Interbank Payment and Settlement Systems, because when payments work, economies grow, businesses thrive, lives improve. Partner with us, build with us, connect to Ghana's trusted payments infrastructure. Ghana Interbank Payment and Settlement Systems, GhIPSS.
And while theirs is a beautiful mandate of implementing and managing interoperable payment systems infrastructures for banks and non-bank financial institutions in Ghana, his and that of his institution is a labor of love of doing so for the entire continent. Would you please make welcome the CEO of the Pan-African Payments and Settlement Systems, Mr. Mike Ogbalu III, who joins us. Thank you. Let's now talk about digital financial infrastructure, which is becoming central to expanding access to credit and financial services. What we want to have now is a presentation from Jumo and their approach to building scalable systems that support inclusive financial access. Would you please make welcome the Group Chief Executive, Mr. Paul Welpton.
Good morning, ladies and gentlemen. Thank you, Dr. Asiama, for being such a great host. It's really an honor to be here. As I stand here today in front of all of these incredible industry leaders and talking about digital financial services, I can't help but go back 10 years when we came here for the first time. And I recall sitting at the Bank of Ghana with our partners, MTN and all of the banks, talking about a dream, And a dream well before the era of AI we are today. We were sitting in that room talking about machine learning and credit scoring through artificial intelligence, but it was purely that, only a hypothesis. And through collaboration, I stand here today very proud knowing that we are now in 10 countries doing $300 million a month, and that Ghana is truly the flagship that started all of that. It's that flagship that we use to show some of our other partnering countries how to do responsible digital credit finance. I think we cannot start, and I'm so glad that the Honorable Governor of Rwanda said we have to start with the customer. That is incredibly important to us. When we look at back at our journey, this is really where it all starts. So what we have on the screen here is Miss Regina Ogu, one of our customers that has been with us for 9 years. And we see an extraordinary journey where a customer that started with small loans just as emergencies morphed into an SME, a business where she's a jewelry seller, she's employing people, and truly an SME 10 years later. And that's only possible through partnership and collaboration, and it's the core of what we do. Fintechs often get valued on how quickly they scale and grow, but I think it's important that when we work together as a team and as policymakers and partners, that we focus on our customers and the end users that we're all very passionate about. So we often hear the words, it takes a village to raise a child. There's so many of these metaphors. But for us, truly, when we look at the data of Regina, it's a story that I can't tell you how much work from everyone in this room that has to be. Without a mobile network that gives you payment rails and interoperability and the ability to disperse into a loan and collect from, that won't be possible. If you look at Regina's journey, you'll see she's been funded by 4 banks. We believe that it's impossible for one balance sheet or one funder to do that. We don't believe in disruption. We don't think it's a market you should capture, but we believe it's important to help a customer through their entire journey in open competition. If you look at the big spike on the graph here, that is when Miss Regina went through a tough time. It took her 356 days to repay her loan. But through very collaborative policy making with the Bank of Ghana, we've implemented a structure where there's no penalties and no punitive compound interest on a customer of this nature. And that allowed her that only after her 4th loan, she came back into the system, and it gave her the ability to grow her business to now 6,500 cedis a month. That is an incredible feat for one customer to do. And if we start focusing and zooming out on how many of these customers we've served, you will see the incredible impact that collaboration on policy making, pricing, and most importantly, partnerships with local institutions, all of the banks that are here today, and of course, our telecommunication partners. So let's fast forward to today. Where are we in Ghana? Almost 11 million people served through all of these partnerships. We've done 66 billion cedis of disbursements to these customers. That's almost 3 loans every second. So as I've been standing here talking to you, we have real Reginas in the market accessing their loans in real time. Now, we've traveled the world to see best practice and see how digital credit works, and we truly believe that there's nowhere else in the world that we see this level of interaction like we see in Africa, and specifically in our flagship Ghana. 3 loans every second. I think, importantly, risk needs to be low. So even with all of that access and all of that lending going on, we see only 3% default rates. And that is because we've got incredible partnerships with our banks and with the regulator, making sure that we stay within those boundaries. It's important that we get to as many people as possible, but we have to do that responsibility. We've spoken about education a lot today, and we feel that is the most important part of financial inclusion. I think what Regina's story showed us is that even if someone defaults on their first loan, if you treat them fairly, you don't outprice them into the market so they never return, they could come back and 9 years later be an incredible customer that all banks and funders can benefit from. So how did Ghana succeed, and why is it the flagship? It really is what our honorable host said this morning about open collaboration. We got here 10 years ago and we started the conversations with dreams and innovation. We learn from each other. But if you see and you look at this graph, it is truly the only way we get to scale as all fintechs on this beautiful continent. Of course, we will have bilateral relationships, as you can see depicted on this image, and we will have to talk commercial terms with individual partners. We get regulated by the fintech office as a fintech, and those are bilateral. But it is truly in the middle where we all have open dialogue about the growth and how we want to move forward, where the magic happens. And that is really the flagship hypothesis that Ghana has proven that we want to transfer to the rest of the continent. So let's use a real life example of how we did that very recently. I think pricing, specifically in digital credit, has always been one of the points and most talking about points. And recently we had open conversations with the Bank of Ghana, all of our banking partners and our telecommunication partners about how do we see pricing of the individual versus an ecosystem. Now we know we've never compounded and we don't believe in that punitive interest, but there is an argument to say, should customers' prices reduce over time? And what is it that you're ultimately trying to do? Are we trying to get Regina to a 1% interest rate? Or are we trying to create more Reginas? And that was a question that we posed to each other as we work through this. And what this example shows you is the incredible resilience of a collaborative support through very highly stressed times. As you can see there, we had almost 1 million, oh no, I've gone 1 to 4. Apologies. As you can see there, we've gone from almost 1 million new customers onboarded every year through deep economic stress and the fluctuation of inflation and the cedi dropping to only 600,000 customers in 2022. And that's when the conversations became very critical, is to say, when liquidity dries up, how do we solve this together? That's why the multi-bank and the multi-partnership model is so important. Because we understand that there are certain players that will be in for a certain point of time, but circumstances change. Risk appetite change, and we need to make sure that at the end of the day, Regina is always protected. So we worked together with the central bank and approved 3 new products that went onto the menu through our system, and we started creating that buffer. Created excess capital that means that we can sustain the access we once gave. Because more importantly than access is the sustainability to not let that customer grow. And as you can see, as the economy started bouncing back, we've taken all of that excess capital and onboarded new banks and more funders, and we've grown that to now 2.3 million new customers included on the financial system. That is in 2025, people that have never had a loan coming on for their first loan. And they're now part of the 11 million Reginas that we've already served. And this is an incredible example of how all stakeholders in this room work together. We can move forward even through the toughest of monetary policy times. I'm going to leave you today with a few interesting observations of how we've developed financial inclusion together. So the 3 pillars that we believe in is really access, its usage, and its resilience. I think access we've proven together, specifically in this beautiful country, that it is possible to use alternative information. It is possible to use partnerships and open collaboration to give millions and millions of people access. And we will continue doing that. I think usage is proven. We can see someone like a Regina, 9 years later, 104 loans later, only spending 16,000 cedis over a 10-year period of interest and building a business even after she defaulted. We see that we've got usage, and it's a rich, very data-driven approach of understanding our customers. But the question is resilience. How do we keep and protect this? How do we open this ecosystem to competitors? How do we make sure we've got all banks that want to contribute into this and we don't close the system? How do we use our regulators? How do we use policy to build this resilience? And then more importantly, how do we transfer this knowledge to the rest of this content? I want to leave you today with a question, which is my mission as the CEO of GHIPSS, is to say, how do we work together to serve the next 100 million Reginas on this beautiful continent I call my home? Thank you.
One more time, ladies and gentlemen, Mr. Paul Welpton, the Group CEO of JUMO. In answer to that question, let me escalate it and say, how can we empower the 1.4 billion Africans? Is that something we're interested in doing? Then for the next few minutes, let's have an insight from the Secretary General of the Africa Continental Free Trade Area Secretariat on digital finance as an enabler of continental trade integration. Please lend your attention to the screen.
Governor Esiama, distinguished ladies and gentlemen, let me start by appreciating the opportunity on behalf of the AfCFTA Secretariat to present this message of support for the 3I Summit 2026 edition. The AfCFTA marks the reinvestment of Africa's economic future through the creation of a single digital market. In order to enable us to achieve this ambitious objective, the heads of states of the African Union adopted the Protocol on Digital Trade. Investing in digital infrastructure will require concerted efforts of the private sector, central banks, the African Union, in order for us to make the necessary interventions and deploy digital technology to advance integration of trade in Africa. In this regard, the policy guide that has for some time approached digital payments and fintech innovation as if they are complementary to trade is proven not to be true. That framing is no longer sufficient. Investing in digital infrastructure is not just a supporting element in reaching an integrated market, it is increasingly proven to be an operational backbone that is required to achieve market integration. The persistence of high transaction costs, the cost of currency compatibility, settlement delays continue to constrain accelerated intra-African trade more than the presence of tariffs. In some trade corridors on our continent, the cost of moving money still exceeds by far the cost of moving goods. We must urgently address this imbalance by deploying digital technologies. Recent efforts in this regard, including the rollout of the Pan-African Payment and Settlement System, which enables payment in local currency on a digital platform, has the potential to reduce transaction costs, and indeed, it signals the recognition that trade must be involved with digital infrastructure as a head. The strategic question is no longer whether investing in digital infrastructure matters or not, but whether it is being deployed at the scale and the coherence that is required to support market integration. Evidence demonstrates that companies that deploy digital payment systems, for example, are more likely to engage in cross-border trade and are more likely to reduce the costs associated with currency convertibility and are able to better manage challenges related to payment verification and settlement risks. This has direct benefits for the AfCFTA and for enhancing intra-African trade. We know that in Africa, intra-African trade is driven largely by small medium enterprises, youthful entrepreneurs, many of whom operate across borders and in semi-formal and informal contexts that require efficiencies in order to scale. without accessible digital payments systems, these drivers of Africa's economy will remain excluded from the broader market and will not be able to achieve economies of scale. It is precisely in this context that the AfCFTA protocol on digital trade becomes pivotal. The protocol seeks to address the constraints that existed for some time that include, amongst others, constraints related to market access, cross-border, regulatory convergence, trusted cross-border digital transactions, protections of digital personal data, etc. By the next edition of the 3i Africa Summit, the measure of progress should be not additional declarations, but tangible outcomes that demonstrate functioning cross-border payment systems, for example, measurable reduction in transaction costs based on deployed technologies, increased SME participation in digital trade, custom systems that are digitized, and as I mentioned earlier, the digitization of payment systems. All of these efforts will require collaboration between central banks, the AfCFTA Secretariat, and the African Union. We stand ready as the AfCFTA Secretariat to partner with all of the relevant stakeholders to ensure that the ambitious objective of digitizing Africa's economy is within reach. I want to thank you once again for the opportunity, and I wish you very good deliberations. Thank you.
And if His Excellency Wamkele Mene, the Secretary General of the AfCFTA, calls us to actionable outcomes, it's because he and his organization have led the charge. Ladies and gentlemen, it is worthy of note that the protocol on digital trade, women and youth, is the first of its kind in the whole wide world, and was achieved right here in Africa. Please. To this end, we ask a very simple question. What's the next frontier going to look like? How does it begin? Where is it going to begin from? We're going to ask ourselves how to outline priorities for scaling solutions, strengthening ecosystems, and sustaining momentum beyond this summit. This or these we shall do in our breakout sessions. But here, to flesh out the lessons learned from this opening ceremony and to charge us to go into our breakout sessions is the First Deputy Governor of the Bank of Ghana. Please make him welcome for his keynote, Dr. Zachary Momoni.
Jerry, thank you very much. Honorable governors and deputy governors from across our continent, esteemed partners, distinguished guests, ladies and gentlemen, permit me to start with just a brief statement, one that is, I believe, a fact, that the next frontier of Africa's financial future is not ahead of us. It is being decided now and in this room by the choices we make here. Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. Thank you very much. It is a privilege to deliver this closing keynote under a theme that captures perhaps both agency and accountability. The next frontier begins here. I thank you sincerely for your engagement throughout what has been a rigorous, forward-looking opening day of the 3I Summit. Over the course of the day, we have moved from vision to clarity. We have examined what it will take to build a digital financial system that is not only innovative, but one that is also inclusive, secure, and truly Pan-African. For me, 3, or let me say 4 lessons or conclusions stand out clearly. First, that Africa already has the building blocks, and we have seen this run through all the speeches and panel sessions that we have had so far. Across the continent, we have proven models: mobile money, instant payments, agent networks, and government-led digital transfers. The task before us is therefore not invention, but scale, and enabling seamless, but scale, connecting national systems, harmonizing standards, and enabling seamless movement of value across our borders. Second, and this has also been echoed variously by our earlier speakers, that fragmentation remains our biggest constraint. Disconnected payment systems and even regulatory frameworks and limited interoperability continue to hold all of us back. Without deliberate coordination, these gaps will persist, and the promise of a single digital market will remain out of reach. Third, that leadership will determine the outcome. And here, you see, markets alone will not deliver this transformation that we all yearn for. Governments, central banks, and relevant regulatory authorities must take active role in shaping the architecture and direction of the ecosystem, ensuring that innovation advances stability, trust, and inclusion. The fourth one, and this is one that has been mentioned as the fourth I in today's session, and it has to do with implementation. So fourth, that implementation, the fourth I, is as important. Here, let me underscore a point that Her Excellency the Vice President made here, that Ghana is open to partnerships across the continent, and we are ready for business. The Deputy Governor for Rwanda mentioned the partnership we already have with Rwanda, and that has also been mentioned by Governor Johnson Isiama. We are open for business, and Ghana has taken the lead to have a pilot arrangement with Rwanda, and we are inviting others as well to come along. Against this backdrop, the path forward is therefore clear. We must scale what works by committing to concrete timelines and cross-border partnerships that move beyond pilots to full implementation. We must build systems, not silos, by strengthening digital public infrastructure, investing in supervisory capability, and developing the talent required to sustain a continent-wide financial ecosystem. And critically, we must sustain momentum beyond this summit. I repeat this, and it's also part of the implementation. critically that we must sustain momentum beyond this summit. The success of the 3I Summit today will not be measured by the quality of our discussions here alone, but the actions that we take tomorrow. Here again on implementation. Do our collaborations endure is a question we must ask. Do our reforms materialize? We also must ask this. Do our institutions translate insight to execution? This is also a question that we must ask ourselves. Surely, this transition will not be without risk, as has been underscored variously by a number of our earlier speakers. The Honorable Governor of Tanzania mentioned the issue of mistrust among those venturing into the ecosystem on the fintech and AI sections. So, at every step, we must ask a fundamental question: who benefits? And are we expanding inclusion in practice, not just in promise? Ladies and gentlemen, the next frontier is not a concept, it is a commitment. It lies in the decisions we make as policymakers, the investments we make as institutions, and the partnerships we choose to build across our various bodies. Let us therefore leave this summit with clarity and resolve to connect our systems, to align our policies, and to execute deliberately and at scale. If we do so, the impact of this gathering will be visible. The impact of this gathering will not only be visible in months, but the transformation of Africa's financial landscape over the years will also be clearly visible to all. The frontier begins here, but its success, again, depends on what we do next after we leave this room. I thank you all for your attention.
Indeed, the frontier begins here, but its success is determined from what we do when we leave this room. Please put your hands together one more time for the first Deputy Governor of the Bank of Ghana. Talking about who benefits from all that we do, I'm reminded of our great friend Ravi Menon, the immediate past Managing Director of the Monetary Authority of Singapore, who had this to say, that everything we do in fintech must have a larger purpose. Everything we do must ensure that we cover costs, we seize opportunities, but understand that fintech is more importantly about solving real-world problems, improving lives, promoting a more inclusive society, and securing a sustainable planet for all. Armed with this, I'm pleased to announce to you the modalities for our next engagement, the breakout sessions. Coming up shortly, ladies and gentlemen, we shall have a coffee break which will last for 30 minutes, culminating in lunch. All our VIPs bearing the red tag, you will be escorted to the VVIP station. All others will be led to the exhibition area. From there, you'll be shown your respective breakout sessions. We have lunch, but the good thing is, it's discounted lunch. You have to pay something small. No, it's nothing much. It's nothing much. But please, the coffee break is free. Lunch is optional. For our breakout sessions, all those desirous of joining the following groups, please, these are your areas. Borderless payments conversation will happen right here in this hall, starting at 1:30. We have 2 roundtables on digital public infrastructure, starting at 1:30, and on regulating stable coins at 3 p.m. That will happen in the conference room 1. The ushers are on hand to assist you And then we shall have another on digital credit track, which is happening in Hall 2, and that's located in the celebration area. Inclusive instant payments track will also be taking place in Hall 3, located in the building opposite the exhibition hall. Ladies and gentlemen, it's been time well spent here at the opening ceremony. I hope that it gives us enough fodder to contemplate and arrive at tangible, actionable outcomes on our deliberations forward. I wish you fruitful deliberations, but more importantly, bon appetit. I'll see you all shortly. For all our VIPs, For all our VIPs, our Director of FinTech would escort you to the VIP lounge. Kindly, I ask that we all make our way to the exhibition area behind this building, where coffee break is ongoing for the next 30 minutes. Borderless payments, yours is this hall. You return at exactly 1:30.
I'd like us to say back. Good afternoon. Thank you very much. It's a genuine pleasure to be here in Accra for the 3i Africa Summit. It's my first time in Accra, but like Our Excellency, the Vice President mentioned, I'm assured that this is not going to be my last time here. Very recently, we've noticed that Accra has become a city that has become one of the most important when it comes to conversations around fintech and digital finance on the continent. So once again, welcome to the main plenary on borderless payments. To the central bankers, regulators, founders, investors, and builders in the room, thank you very much for being here. Now, Africa is building the solutions that guarantee shared prosperity for its people, and us being here today is testament to that fact. And I would like to begin with a very quick story that I suspect many of us will recognize, and it's something that we're very familiar with. Let's picture a trader in Lagos. Let's say her name is Amara. She runs a fabric business and she sources her goods from a supplier here in Accra. Her business works. She doesn't have any problems with her business. But every time she needs to send money across the borders, the process takes a while. And it costs her nearly a tenth of what she sends. And this also affects our supplier here in Accra, because whatever he gets here is lesser than what she sends from Lagos. And this is just between two cities separated by only 1 hour by flight. Amara's story is not an edge case. It is the operating reality for millions of businesses across Africa today. And here is what makes this moment different from the conversations we've been having even 2 years ago. The numbers that we are seeing currently tells us a story that Africa is already solving this problem. Because according to GSMA's report last year, and it's already been mentioned here today, $1.4 trillion of the world's $2.1 trillion in mobile money transaction value came from sub-Saharan Africa in 2025. And this is a recent report. So this is 2 out of every $3 of mobile money transactions coming through Africa. Once again, please, we would plead with everyone to please come to the center of the room so that we can have an intimate conversation. People to my far left, please, if you can move towards the center of the room, and from the far right as well. As I was saying, 2 out of every $3 moving through mobile money anywhere on earth moves through our continent. In mobile money, Africa is the world. But when it comes to sending money to sub-Saharan Africa, this still costs an average of about 8.45% of the transaction value, which is more than double the United Nations SDG target of 3%. So you can see that the reason is structural. Most of the intra-African payments still route through correspondent banks somewhere in America or in Europe, even when both parties are on the same continent. Thankfully, all of this is now changing. We have the Pan-African Payment Settlement System, which is now live in 20 countries. And earlier this year, PAPS and OnAfric launched Africa's first wallet-based outbound payment pilot from Nigeria. Naira in, cedis out. There is no more hard currency intermediary, which shows that the infrastructure is no longer just a concept. So the question I want to leave with everyone here today in this room is, how do we close the last mile from the infrastructure that exists in policy and in pilots to the experience that someone like Amara and so many other millions of SMEs across Africa, how do we close the last mile to ensure that this experience moves from policy and pilots to being tangible products that can be operated through a mobile phone? And this is the conversation that begins now. Please join me in welcoming our speakers for today's event. Please, a round of applause for our speakers. We'll be opening the session with a fireside chat. And the speaker for our fireside chat would be Victor Asemota, who is the founder of Swifter Corp and Kita Advisory. A round of applause for him, please. And our moderator for this session would be Camille Cadet, the founder and chief executive officer, MTech. A round of applause for her, please.
Hello, everybody. Good afternoon. Welcome back from lunch. I hope you had lunch. I didn't have lunch yet, so not sleepy yet. But I'm looking forward to this conversation. Thank you, Victor, for joining us.
Thank you very much, Kamla.
And I would like to ask you, because you do it best, I think, to introduce yourself and give some background about yourself before we jump into the fireside chat.
Okay. This is the most difficult part for me, but I will actually simplify it. So when people ask me, okay, so who am I and what I do now? I tell them that, okay, I'm a retired entrepreneur, part-time investor, and full-time dad. So,
There's a whole lot of that, where that came from, but maybe let's jump into the conversation. Okay. So today we're talking about the difficulties of doing cross-border payment, but also expanding cross-border across Africa. Yeah. Given your experience, I mean, you started from the days of mobile money, early days of mobile money. What is the nature of the African market that we're talking about? Before we think about cross-border and one company starting in one market going into another market, how would you define the African market opportunity?
Yeah, there's a huge infrastructure gap in Africa, and if you look at commerce in Africa in general, people have figured out ways to try to do things. They've had workarounds that companies like telcos and banks eventually came around to. So for mobile payments, for instance, there's this whole perception that it was the whole airtime to cash thing that started it, but it's actually the other way around.
Really?
Yeah.
That's what I knew the story was to be.
Thank you. Because people don't know that MTN Nigeria, as far back as 2003, 2004, started a company called, what was it again? There's a NEFTO, Nigerian Electronic Funds Transfer Organization, in conjunction with banks. What they wanted to do at that time was to reduce their distribution costs, because the banking system, is actually very, very costly when you want to actually use it to actually do the airtime business for the airtime supply chain. I remember a friend of mine who put 1 billion naira into his airtime business and ended up with a 4 million naira loss because he was using banks. So when he was using cash, of course, it was better. So the telcos did not want their dealers to actually bear that cost anymore. That's why they wanted to go into payments. So they had this partnership with about 5 banks, but they never got a license. So because the central bank, for some reason in Nigeria, decided that, look, it was better for the likes of InterSwitch, a consortium owned by the banks, to have that license, and they also started NIBS, too as well. So and MTN had the infrastructure. The banks did not have the infrastructure.
That's interesting.
Yeah.
So there's an aspect of policy, and maybe that leads into the next question, right? So it's interesting that mobile money, when I think about it, mobile money is not cross-border today.
Yeah.
And it seems like it's not a technology issue, it's a policy issue.
No, okay. I would say mobile money is not cross-border. You can, because people don't understand that, okay, something like the USSD protocol is actually universal. There was a time like that I was in San Francisco. My friend Kenneth traveled with me. He was able to transfer money from his bank account to his M-Pesa wallet to use his M-Pesa wallet to pay his bills in Kenya when he was in San Francisco. Okay? So because USSD was possible. So now, the infrastructure to do that exists, okay? But the policies to actually make the handshake happen. I remember, okay, they're called On Afrique now. They used to be called, was it MTech? Not your own MTech. So On Afrique, when they were not called On Afrique, had actually bridged telcos, It's in the telco's interest for them to actually talk to each other, for Vodafone and MTN to talk to each other, for Orange and Airtel to talk to each other. So yeah. they had nothing against it. But the policymakers made it,
It's hard.
A bit
it's
difficult.
very hard.
Yeah.
So, as we work with regulators, we see that as well. Of course, each jurisdiction has their priorities, their stages of development. But is it what's at the core of what makes it difficult for cross-border payment and cross-border expansion in Africa? Is it the policy aspect of it?
There's infrastructure, which is not just there at all.
Okay.
Telcos practically own the infrastructure. Policy-wise, it's interesting that it's easier for policymakers to accept the standards of Visa and MasterCard who are coming from outside than to develop local standards and actually accept local standards. And the same thing we're talking about mobile payments, for instance. Okay, mobile money was built from scratch to solve a problem in Africa, an African problem. It's uniquely African.
Yes.
And the standards were developed in Africa. So there's no reason why you should not adopt those standards. The adversarial nature towards telcos, even towards fintechs, does not make things, easy.
And if I can ask you to share, that wasn't part of my question, but I think you usually talk about, the unseen markets.
Yeah.
Sometimes people think it's Ghana, Nigeria, Kenya, South Africa, right? But you have a very unique experience around other markets, the unforeseen flows of cash. And you're saying that the infrastructure is what's lacking here and that mobile money solved that.
Yeah, 2008, the reason I'm actually living in Ghana now, we came here, we implemented mobile payments in Ghana. Before we finished implementing, USAID came to us and asked us, okay, if we could bridge the Ghana, Benin, Togo, Benin, Nigeria corridor, because they had seen $10 billion with a B of informal commerce flows along the corridor.
Which corridor?
The Ghana, Togo, Benin, and
$10 billion.
$10 billion. And I thought they were joking until the guys in the banks were telling me that just school fees alone between Nigeria and Ghana, I think at that time was about $2 billion a year. So, there were reasons.
Yes.
There were good reasons for all of that to be done. But the will to do it, Now, Francophone Africa is a very, very interesting place. I also live in Togo too as well. You have all of Francophone Africa, common currency, common regulator. So ideally, they should do what they've already done in Europe, the whole regulatory passporting, all of,
Right.
all of that. But it's not happening because there's no infrastructure. Something we discovered recently that shocked me. We're doing some work with some of the community banks in the Francophone area. I realized that these guys were still using paper. Yeah. So that's actually one of the biggest problems in Africa. We're still so behind.
Yeah.
Yeah.
Yeah. And in some ways, and then in some ways, you're ahead. When you think about the US, so sometimes it seems easier to get a license in Canada than for a fintech to get a license in Nigeria. There's so many fintechs that have gotten licenses in other jurisdictions compared to getting licenses here. But payment system, mobile money is more advanced than the typical app structure that you have in other markets. So I hear you, but it's such an interesting mix, I think.
No, I think, okay, so this is whenever people say that, this is my own pushback, okay? Look at Bank of America, for instance. The infrastructure that Bank of America, all of those North American banks, what they've had for ages, was what Visa and MasterCard built upon, okay? So the trust is already there, the standards were there, so it was easier for you to build standards upon that, easier for the trust layer to be there. Things like anti-money laundering and all of that, they're far ahead, okay? So those things are still very, very necessary. And I think I actually sympathize with African regulators because when you do not have that infrastructure, the banks in Africa, as far as I'm concerned, were built for the benefit of the owners. They were not building it for doing commerce in Africa the way commerce was supposed to be done. They have niches, and in those niches, they are very, very efficient. So when people say, oh, look, I can do those transfers very well. Yeah, you are doing it within a niche.
Yes.
But beyond that niche, it doesn't serve any other person's purpose. If you go to the markets, they are still using paper, to record things.
Yes.
In fact, the fintech companies, one of their biggest challenges in Africa is that we do not have enough merchants that have gone digital. The market is still very, very small.
I think that's a gem right there as far as figuring out some problems, because, it's one thing to stay at a high level and say, we're going to do merchant banking.
Yeah.
Right? But it's not only about the service provider being able to process payments for them. Is the merchant even enabled to do that transaction?
Precisely, because that access is still a huge problem.
Yes.
The infrastructure that needs to be built for commerce is not just payments and banking alone. You need to have access on a totally different level. India, surprisingly, moved very, very quickly, on that. I saw what they did with UPI.
Yes.
I saw, when we started the first telco in Nigeria, my family was an investor there then. I remember when we're trying to raise money, people were telling us that, oh no, this model wasn't going to be very successful because in India, they had Airtel there that did not have as many customers as we had planned, in Nigeria. But look at India today. Look at what India achieved, in that decade and, in the decade afterwards. And look at what we also achieved, in Africa, too as well.
Of course.
But India solved their own problems using local standards, unique standards. They did not wait for Visa and MasterCard to solve it for them. In Africa, we're trying to do that now with AfCFTA and PAPS and all of that. Yeah, but I think that we waited for too long, and we depended too much on other people's standards rather than developing our own standards.
Yes, yes. And that's why at the beginning, I was really happy to hear Madam Vice President really hone in on the need for sovereignty, but also the need for collaboration. So last question as we wrap up here. There's a debate on whether Africa can harmonize and have one policy like Europe or like French West Africa? Or is it an integration model based on the different plus and minuses that you've seen, the pros and cons of different countries, different market sizes? Is harmonization really possible, or is it an integration play when it comes to policy and alignment across the continent?
I think that there are two answers to that. Okay, politically, there's no will to make that happen. Very quickly. Look at the whole West African common currency thing. It never happened. Okay, but if you start tackling these things, systematically, between Ghana and Rwanda, they've established something and it's working. Okay. Maybe you do something between Ethiopia and Nigeria, the two large markets, and see if it will work. Okay. No. South Africa, I don't know if they want to open up. Politics is actually the biggest problem, the biggest challenge. But then again, they can be forced to do it, because if you look at what stablecoins and cryptocurrency has done, it has brought in a new layer of standards that you can't escape. So it's better for you to now find a way to capture those flows and tax them than for you to let them keep happening, in parallel.
Or ban it.
Exactly.
Thank you so much, Victor. Thank you very much. This was an honor. And for those of you who don't know Victor Asimota, please follow him on LinkedIn and Twitter. I've been a follower for many years, and for me, it's an honor to have this sit down with you. Thank you so much.
Thank you very much, Kamran.
Thank you, sir.
Please, a round of applause for them again. You would agree with me that that was an insightful conversation with Victor Asimota. We're looking at a future that is very close, and we're very optimistic. I think in Nigeria, the Central Bank of Nigeria had a report recently where about 62% of fintechs were in support of regulatory passporting. So we're looking at a future where it's very possible for us to have harmonization of regulations across the continent. In the next few seconds, we'll have our next panel, which is focused on building seamless cross-border payments in Africa. I would like to invite our speakers, starting with Dr. Abbas Al-Basha, Senior Strategy Consultant, CBDC. Please, a round of applause for him as he makes his way to sit down. Thank you. Again, please, those of us sitting at the corners, can we please make our way to the center of the room? Our next speaker is Dr. Idem Azogenu, please pardon my pronunciation, co-chair Afro Champions. Please, a round of applause for him. Welcome, sir. Our next speaker is Mike Ogbalu III, the Chief Executive Officer, Pan-African Payment Settlement System. And finally, our speaker, Owureku Asare, Acting Head, Fintech and Innovation Department, Bank of Ghana. Please, a round of applause for. Okay, please, a round of applause for our moderator, Nshuti Mbabasi, Global Managing Director, Better Than Cash Alliance. Please, a round of applause for her. Thank you.
Thank you, and good afternoon, everyone. Thank you for making your time to be here with us. Having listened to Cadet and Victor, you can't help, Kamel and Victor, you can't help but reflect on the sentiments that have been shared. And I'm hoping that you all will be the hope that restores Victor's faith. But we're here to discuss exactly what Madame Clara started with in the morning, and talking about the Makola trader and how she instantly wanted to be paid. She knows the best solution for her is her mobile money. And so when you think about her and you think about all the traders in Makola, in Aflao, in Aba, everywhere in the world, they want to be paid instantly. And this is the essence of this discussion, because it really is about how do we ensure our continent truly has payments that work the same way we cross the oceans and pay with Visa and MasterCard and Amex and others. How do we make the African solutions that are working in Makola operate exactly the same? And whether I'm coming from Rwanda and I come to Ghana to buy in Makola, or I go to Aba, or I go wherever, how can I pay using my mobile wallet the same way that I do at home? So you gentlemen have to restore the faith. But I'll start off by saying that, in fact, there is political will on this continent to make cross-border payments work. And you heard the Vice President this morning and the Governor talk about the Africa Continental Free Trade Area Protocol on Digital Trade, and I see the architect of that protocol here in the audience, Dr. Chidede, and the AfCFTA team, welcome. And the President adopted that protocol in 2025. It took us 18 months to write, negotiate, and deliver that political will. The implementation then starts with, how is Ghana going to deliver these payments for the Makola merchants and those that they are transacting with to get goods into Ghana? And so, Mr. Oreku, how are you and your team delivering on that promise that the heads of state committed to on enabling merchant payments that work for every trader, regardless of size, regardless of what they do, where they live, or how much they earn? How are you and your team approaching that today?
Thank you very much, and good afternoon to you all. So this is quite interesting, and it's something that's I'm personally invested, because prior to my current role, I used to work out of Lome, and it was really a struggle seeing these market women carrying cash cross the border, exchange it there, transact. If there are some left, they just come back, change it back to cities, losing value and bringing it back to Ghana. So I think personally, there's a problem. And I don't think we have technology issue. And as you rightly said, there is no political challenge because that hurdle has actually been settled. But I think what we need is clarity and correlation of the willing to be able to move this to the next level, because I wouldn't want to prescribe any, because of my position, prescribe any solution. But what we need to look at is, what are we doing to be able to make sure that it's less costly for the Makola woman or the Aba woman, it's faster for her, and she doesn't need to have any liquidity position before those transactions happen. Because today, if somebody is moving from Aba to Ghana, and they've actually been able to learn the act so much that even if they have to send goods to Ghana, go through all sort of challenges, get it to Ghana, they sell, the revenue, the funds that they get out of that sale, they have to, even if they don't need to, buy goods and send it back to Nigeria. It's much easier for them to cross, take all these funds that has been converted into goods back to Nigeria without losing value than going through the loops to be able to get their funds in Naira. So I think it's a matter of trying to look for a solution that is less costly, that is faster, that does not require setting money aside for settlement. Thank you.
That is better than cash. That's the name of the organization I lead. And just to press a little bit on that, Oreko, the element of digital trade, because even that physical movement of that woman to go to a bar, with digital trade, we can solve this. And it really...
Absolutely.
And so how are you envisaging making sure that the order, I mean, this is even a realm that the central bank gets into, that the lady in Makola can trade digitally, no longer has to leave the market, deal with cash, and how are you working with the financial sector to get this done?
For us, I think trust is a challenge here. The reason why the lady had to close shop, cross over to Aba, is because of trust. Trust that the money that she's sending can get safe, it can get to the other side, and trust that her goods can be brought back. So there are two things. Make sure that that woman can still be in her shop to be able to send the value to the supplier in Aba. And also leverage on a digital trade protocol to ensure that that goods can come through the different borders for the woman to receive at her shop. That is what, from the central bank perspective, we are working purposely initially for the value to be moved, and also work with the AfCFTA to ensure that that digital trade is actually activated to make sure the goods can get to her in the market.
Thank you. My brother Mike. When you came in, there was a round of applause, and I remember the Secretary General talked about PAPS, the promise of a Pan-African payment and settlement system that would allow that value to move in a trusted way and in a currency that Makola lady knows, which is CD. How is PAPS delivering on this promise for these traders, like those that are trading at the borders or in the market today?
Thank you, and it's good to see you again in Shuti, and it's good to be back here. So for us as PAPS, we recognize that payment is critical for the survival and the thriving of the continent. So what we've decided to do is to build the plumbing that will enable that transformation for the continent. So when you go into a house, you see the beautiful, shiny toilets, but then there's a plumbing, that is the dirty part that actually sits behind that. And that is what we have decided to do. Now, taking it to what we have been able to achieve so far, today we have PABs working in 21 countries. Today we have 180 commercial banks that are integrated. We have about 10, 15 fintechs, Pan-African sized fintechs that are leveraging the PABs infrastructure. Last year, we grew about 1,500% in terms of transactions. And this year, we are growing month on month at about 70% every single month. We intend to allow this Mokola trader to be able to trade with his counterparts from across the continent. We want him to begin to see our market as not just being Ghana here, but 1.4 billion people. And it's already beginning to happen today. Today, the PABs platform is extended to mobile devices across the continent. And thanks to the able leadership of our director and also Clarence Day, we've seen this actually, Ghana is actually doing much better than probably any other country on our network. So today, this trader is able to sell to someone in Egypt, and he's not able to worry about how he or she gets paid. And he's able to get payments across the channels that he's comfortable. But now taking it forward for us at PABs, the next level for us at PABs is, now that we've created this plumbing, how can we allow an MTN wallet issued here in Ghana to be able to work in, say, Kenya, riding on the M-Pesa network, for example? How can we allow a wallet issued in Egypt to work here in Ghana on the MTN network? Those are the kinds of things that we are innovating. So beyond just creating the framework, bringing the ecosystem together, we are now looking at the use cases that brings the plumbing to life. So that's what we are doing. And so far, we're happy with the results that we have seen. We're beginning now to show practical examples. It's becoming more real to the end users. And we saw, for example, we did a border visit between Nigeria and Benin. And we saw a few traders who trade the shuttle between Lagos and Accra. And they have said to us that in the past, they used to carry so much cash and they get robbed along the way. That today, what they just do is, while they are at their supplier's shop, they're actually able to do an instant payment, and the supplier gets value instantly in no more than 120 seconds, and they're able to actually carry on with their transaction, and that it has changed their lives.
That's really commendable progress. We can congratulate you, Michael, and the visionary work of the AfricXim Bank. But just to press on that, Victor mentioned something about the inexistence of merchant payments as a use case, that it retards basically the fintech proposition, because that it is in delivering for that Makola merchant, a merchant payment that makes a difference, and for that cross-border trader. And particularly because in the peer-to-peer payment transaction that dominates today between M-Pesa and MTN, for example, it costs that trader money to send that peer payment and also the FX conversion. And with the merchant payment, it's only the FX conversion. And it's also where innovation to really drive MSME access to finance sits. What are you doing specifically to enable that transaction type to propel fintech solutions further? Because indeed, they're the ones that are going to reach the last mile. Thank you.
And thanks. We've built the rail, and the fundamentals of the rail is that we want to be able to process transactions at as low as possible cost. So, for example, for a PABs has actually seen that transactions has been going at less than 10% of what you would find as alternatives in the market. We intend to further reduce this. Some of the guiding principles that we have requires us not to kill existing players in the market, but to actually price our service at a price point that allows those players to continue to thrive. Now, we've also dealt with the issue of speed. We've reduced the transaction time from a few days to a matter of a few seconds, okay? Now, the merchant experience, a lot of the players there are the banks, the fintechs, who today actually are able to support that exchange between the buyer and the merchant. Some of it today is largely cash, and there's also the card rail component of it. And then there's what the fintechs are doing. What we're trying now to do is to extend the interoperability, Pan-African interoperability, to that merchant experience, okay? And we have done this through a number of initiatives. First, we launched the PAPS card. The reason why we launched PAPS card is that the cost of the global schemes to that little merchant in Mokola is a bit too high, and somebody has to subsidize that transaction. If she's not subsidizing it, it is the commercial banks that are subsidizing. So what we've done is to actually bring alternatives that actually empowers the players in the payment space to be able to provide much cheaper alternatives to that merchant that is in the Mokola market. And once we are able to do that, you'll see that it passes on that cost advantage to the customer. But beyond that, we're actually now transforming, enabling the people in payments, the fintechs, the banks, and so on, to actually be creative as to how they offer that service at the merchant position. And that starts with making sure that he's able to get that service at a lower cost, make it efficient, and also enabling merchants to accept payments from other customers from across the continent when they happen to be at those merchants.
Thank you. I don't know how the payment, the PAPS card will work, considering that Makola Lady wants mobile. I look forward to seeing what you do. Dr. Edem, how is AfroApp Champions supporting the delivery of innovative digital payment solutions for Africa's MSMEs?
Many thanks. And the approach that Afro Champions is taking is one that appreciates what both the central banks and of course PAPS is doing by creating the rail, which is much needed. I mean, you can have 54, 55 countries trading on a big initiative like the AfCFTA on an infrastructure or a machinery that underpins it, being payments costing, what, 7 to 8 cents per each dollar. Quite massive, but given the work that is being done and has been done already in building that rail, it leaves us great room for much cohesion and also much transformation. So I want to sort of applaud the work that PAPS is doing in building that rail. What we are contributing is getting the trains ready to get on that rail. You don't want a situation where you have a rail and then the trains are not there to get on the rail. And those trains are really your SMEs that form the base of our economy. We're talking of 60% of the economy of Africa, in much cases even more, who need to be equipped, who need to build or be put within that trust mechanism within which they can get on that rail and trade. Now, that system works better if they are part of an ecosystem that sort of exemplifies and also amplifies the trust network, because a lot of it requires KYC, a lot of it requires also other activities they are doing that may not necessarily be payments related, but eventually will need payments. And so SMEs would have to register with food and drug agencies, for example. They need to be onboarded one way or the other. There's a trust network that has to be built to be sure that the goods they are making have the quality and safety to make it beyond borders. So by building tools and aggregating tools with regulators that are so critical to the CFTA, like the Food and Drug Agency, we have already onboarding SMEs and building that mechanism that allows trust to be built within that ecosystem. Then there's also the couriers who need to move the goods So working with regulators like the Postal and Courier Regulatory Organization, for example, authority, for example, we're onboarding these riders, these courier services and postal services onto the AfCFTA hub network, which we built in partnership with the AfCFTA Secretariat. Of course, you're familiar with PAPS as one of the key operating instruments of the CFTA, but as AfCFTA Hub is another one of those operating instruments that we've worked with the CFTA Secretariat to build. And across the continent, now in 7 countries, we're onboarding these regulators. And by virtue of these SMEs working with, because they have to register with these regulatory bodies, by virtue of working with them and eventually working with also the associations they belong to, whether it's the AGIs or Association of Ghana Industries or other industries that they are part of, we're already building that mechanism that makes it possible for them now to be ready so that when they have to do payments, they're already verified, they're already proved. And also, we've also reduced some of the cost for KYC, among other things. I believe that the AfCFTA Hub and the aggregation of the regulators that they interface with also reduces the time and the speed required for them to be doing different verification processes. And then when they do get if the interoperability works well, as we believe it should, and the gateway systems and protocols, and thanks to the digital protocol now, you don't have a situation where a person gets his goods to a border and there are issues with logistics per se because it's not been onboarded or there are gaps there. There are issues with, say, safety and quality of those products because they've not been verified. So by the time they get to payments, those links are already verified, integrated, and easily aggregated for scale and cross-border purposes. So that's the contribution that the ecosystemic approach to this effort that the AfCFTA Hub, that Afro Champions and CFTA Secretariat are working on.
Thank you. Dr. Abbas, you have worked with, this morning we heard about the Ghana-Rwanda partnership, particularly around using innovative solutions to power fintech, but mainly to power transactions in a way that serves that Makola trader. What are you learning? What have you learned from the proofs of concept that you've conducted? And what would you recommend for Oreko and team and really every central bank to do to swiftly enable responsible digital payments for MSMEs across Africa?
Thank you very much for having me alongside distinguished panelists. It's a great pleasure to be here. So we had the great honor of implementing a pilot project with Bank of Ghana in 2022, 2023. And it tested also the different online use cases for CBDC, but also offline use cases. We also went to remote areas to test such implementations. Then the Bank of Ghana is really pioneer at this end. So there was another project in 2024, which was jointly executed with the Monetary Authority of Singapore. It was called the DESFT project, so the Digital Economy Semi-Fungible Tokens. And it experimented how SMEs could do trade finance using CBDC on one end and stable coins at the other. So the Ghanaian side, it was ECD. The Singaporean side, it was a Singaporean dollar stablecoin. And then we had also the great honor of implementing a proof of concept project with the National Bank of Rwanda last year. And one of the use cases that we tested was remittance. So person-to-person cross-border transactions using multi-currency CBDCs. And guess who we simulated on the other side? It was Ghana. So now hopefully we can move forward in doing some more experimentations. One of the very important learnings, I would say, and I know that the topic and the domain of cross-border pertains to regulation, vetting, KYC, interoperability, as you mentioned. But if we go to a very deep technical layer, it's really liquidity. Who's provisioning liquidity and at what cost? Because, you know, in the financial domain, money has a cost, yeah, and it cannot sit idle. If it sits idle, then you are losing the opportunity cost of investing it somewhere. So it's this cost in particular that it's the tipping needle of how much it would cost for someone to send either using, you know, the conventional rails or even the digital money rails. But what digital currencies bring to the table, which is different or conventional systems cannot offer, is atomicity. So you have atomic settlements. So in the conventional systems, you have multiple layers. You have institutions holding money on behalf of people, so it's a liability for that institution. And then when you want to trigger a transaction, there is the messaging layer. So you start have messaging, and then you have systems that do the settlement layer, right? And the finality of settlements, there could be cases that it happens on one side, but the other side does not receive it, and so on and so forth. With digital currencies, you have everything encompassed in the tokenized system. The messaging, the value, and also the settlement, which is atomic, final, and instantaneous. What we call atomic settlements, meaning that it either happens or it never happens at all. And this is a very important aspect because it reflects in lower cost for provisioning liquidity. So it's about how much it costs to do this exercise. And then what tokenized systems also offer on top of what conventional systems can do is programmability. Meaning that you can design also what was experimented with the BIS AMMs, or automated market makers. So it's a piece of code, algorithms, that you need to have a pool where different parties provision different currency denominated digital currencies, and then the algorithm optimizes the FX determination while optimizing liquidity. So you have more scope of how you can reduce the cost, which again, it's at the heart of liquidity provisioning and FX determination. If I may add one thing, I had a good chat with Mike on the importance of PAPs for the cross-border. Because even in digital currencies, if we say, okay, CBDCs will coexist with stable coins, so tokenized deposits, with any other forms of digital currencies, you still need a bridge that will onboard all the systems and enable them to identify each other as such. I think in the African context, you have PAPs already, right? So for example, they did mBridge with China, Emirates, Thailand, and other jurisdictions. You have Agora, you have many initiatives to build this cross-border digital currency chains. I think in the African context, it will be really important to leverage the great infrastructure that it's already built and it's operational. And by the way, it's even more advanced than Project Nexus. Yeah, that is still taking shape in Southeast Asia as connecting IPS. This is already taking place in Africa, and it's a great value for moving forward with cross-border, with digital currencies.
That's really encouraging because having worked in the bank, we know liquidity is one of the biggest reasons why these cross-border transactions were difficult to, and even for a regulator, because for the most part, a third currency that is not printed or owned by this continent has to be bought, put in a bank outside of this continent to facilitate cross-border transactions between Ghana and Togo, right? Where there is no wall separating the country, but we need to have a third currency to get it done. So I'm really encouraged by the possibility of having digital currencies, our own, CD, Naira, franc, being in digital form and being able to do that settlement without requiring cash to be printed somewhere and carried somewhere for cross-border payments. I'm sure that when we solve for this, we have a chance to make digital trade a reality for this continent.
If I may, sorry for interruption. Just to add one important note for the importance of PAPs, when you think about it, if you do an exercise of bilateral interlinkages, right? Ghana interlinking with Rwanda, and then Ghana interlinking with Tanzania, and then if you do a calculation, for example, if 60 countries wants to do bilateral interlinkages, it's 1,770 interlinkages. That's why the importance of having a hub and spoke model, like PAPs, for example, because you link once and you can have access to the entire ecosystem, which is also efficient. And it turns again to the question of cost, that you will have a more efficient interlinkages with such a hub that can interlink such systems.
It's a great point. I remember speaking to the Central Bank of India asking, there's all these conversations about DPI and digital public infrastructure. What is the one DPI that we should be prioritizing? And his answer was payments, a trade payments DPI, because their national infrastructure cannot do what he called spaghetti connections to all these countries, to all these providers to drive interoperability. So I guess perhaps indeed, no pressure, is the first African DPI to prevent these spaghetti connections. Now it is to turn that into a reality that delivers for traders like the woman in Makola, or the one selling on Instagram, that wants to really sell their goods as quickly as possible and really benefit from the promise of the AfCFTA. Mike, I saw you picked up your mic. What would you like to add?
No. I think Dr. Abbas is exactly right. Again, we believe we're not going to go and do last mile. And therefore, we believe that our role is to actually empower those players who currently are doing those last miles to be able to do it effectively. And just speaking to what he has said, what we've done is we've taken a step back and we've looked at our infrastructure. Yes, we're able to settle fiat across the borders, yeah, but now we're able to also look at other form factors, including how we can be able to process the likes of CBDCs and stable coins. And what we've done is we've just done this infrastructure in such a way that the players can fly by themselves, yeah, and we'll just worry about focusing on doing our real business. But just to add to this, and this is straight to your point around UPI not wanting to do the spaghetti connections, we have started processes with integrating into CIPS of China, and we're also working at the same with UPI. The essence is that while we're enabling intra-Africa trade, yeah, and lowering and reducing dependence on third-party currencies, then we're also able to enable Africa to trade with the rest of the world. So that's what we are building. Thank you.
Thank you, and thank you all. Oreko, I have to end this with you. Over 85% of what is traded across Africa's borders is agriculture products. And the most excluded communities and underserved are those that grow the food, transport the food to the markets, sell it to us in the markets. And those markets now with digital trade can expand to 1.4 billion. And we heard the vision today from the governor and from the vice president that committed you to a proof of concept to deliver for these people at the last mile. And Mike said, we don't deliver them at the last mile. It's the fintechs. So where do we go from here? When we come back to the next 3i Summit, what will you have delivered? And what do you need from us to get it done?
Yeah, I think today, as Mike rightly said, banks and fintechs leveraging on PAPs to exchange value across borders. But I think now digital currency, and Abbas hinted on that, digital public money, which is CBDC, digital private money, which is stable coins now, gives us that level of another efficiency to be able to solve for lower costs, speed in transacting, and then you don't need to have liquidity positions. So I believe that for the central bank, and as the governor already hinted, we have the framework to facilitate it. Just December, we passed the Virtual Asset Service Providers Act into a law, and that currently we are working towards ensuring that we operationalize the law. That should even allow anybody with any form of digital currency, and Abbas didn't want to commit us, but I'm also committing Abbas to say that we need to be able to get to the point where Ghana has done a pilot with GND on CBDC. Rwanda is doing the same thing. can we allow that trader to leverage on that rail to be able to exchange ECD for stablecoins at the other side, or vice versa? So it makes it much, much easier for that value to come through. If there's a need for them to go through the PAPS rail, use mobile money, go through the PAPS rail, that is also enabled. So from a central bank's perspective, next year, coming to a 3i, we should be able to tell you the values that were exchanged, either through PAPS being channeled through mobile money, or leveraging on digital currencies, whether digital public money or digital private money. So we'll be able to showcase the value and the volumes, and probably the market women involved and those in the ag business as well. So that is my commitment.
Wonderful. And the good news, and I'm going to commit the AfCFTA Secretariat as well. Because to make this happen, to make the protocol on digital trade political will a reality, this is it. And to actualize from protocol to practice is what G&D are doing. PAPS comes in to do. And we all unite to deliver really impact. I don't know if Tamara is here, impact, to implement, to bring the 4 eyes together, the fourth that was added by GFTN. And we were in the room before the GFTN said, you know, we've done these interoperable regulatory frameworks. They are working for us. We will be happy to support the continental interoperability regulatory framework because of the foundations that you as Bank of Ghana and the Central Bank of Rwanda are laying. And so by the time we come back, you are all our accountability partners, because this is for you. It's for all of us. It's for 1.4 billion of us. And therefore we have a stake equal to Oreku and the pressure equal to Oreku.
Excuse me?
To get it done, because it's the fintechs that deliver at the last mile. It's the fintechs that are operating in Makola. And it's the Makola trader that we are all here to serve and ensure that it is also profitable for the planet in that regard. Sorry, Doctor.
No, it's just 30 seconds because the footnote to what my brother Oreku said about something tangible that will be able to come back a year is something he's doing that I think we should applaud. It's the sandbox mechanism they have in the central bank, in particular, which was recently launched. It was a partnership with 24-hour Secretariat, AfCFTA Secretariat, and of course the central bank, but particularly looking at the area of trade finance. That's a huge area in which a lot of trading is happening, but not digital. And now with the partnership with the UK, we have an opportunity now to digitize that process and have a lot of trade financing happening through that mechanism in that sandbox. Of course, there's the NeoFingo platform that was recently launched. And I think we should be able to come back here next year and say, out of this, about 7 billion of trading goes between Ghana and the UK every year. This amount of it has gone through this NeoFingo platform, digitized and giving access to people to trade finance.
Dr. Adam, we're talking about the continental free trade area. I appreciate the relationship that UK has with Ghana, but fundamentally, the Makola lady is selling to Ghanaians and is selling to people as far as Senegal and Rwanda. So hopefully, in addition to the UK, we will have the digital currencies working for us. PAPS truly living up to that promise as it is already begun to set things in motion. And all these payment rails are truly about access to finance. And it will be only possible when they are visible to the ecosystem that considers them risky. And digital payments are really the path to that. So I'm really happy to hear about the work that is going on between Ghana and UK. It is examples like this that give us encouragement, but mainly we need to make it happen across the 55 countries. And I'm excited about celebrating what Ghana, Rwanda, and other coalition of the willing, as we had this morning, will have delivered. I know that I had limited time for this panel, so I'll have to end it here for the next panel. I wonder if I have time for any questions from the audience, Mr. MC, or we have to end it here. One question. Anyone with a burning question? Ooh, okay. The one behind you came first. So it's one question we've been given. The gentleman, but I'm so sorry. I believe in fairness. His hand went up first. Yes.
Thank you. Thank you. My name is Dana Nantogma. I want to find out from the panelists. This morning we've been talking about inter-African payments. We do not have one value in Africa. So even if you still want to do cross-border payment, you will need to be converting from one currency to the other. So we need, and like the gentleman from, the gentleman spoke about digital currencies. So we need to have a Pan-African stable coin that will enable us to transfer money across Africa. And I think we can collaborate with the political will. The technology is there, the concepts are there. Some of us have piloted it in our private capacity. It will work. It is just left with the political will to push towards a Pan-African currency. And that does not mean that individual countries are going to abandon their currencies. They will just ride on path. Thank you.
Thank you. The political will is there. In the protocol on digital trade, there is a commitment to get to a single African currency. And what Rwanda and Ghana are doing that is really being driven with the digital currency provides us with hope for that digital currency to happen, which could be the GND, but I imagine there is enough competition. Is it that gentleman? Okay, I'm sorry. Oracle, would you like to say something to this?
I mean, this is a question that I love anytime I get into a room. You know, even ECHO has tried ECHO, and it's been a struggle. But I think technology gives us that opportunity for us to be able to do this seamlessly. And I know before we can even digitize a currency across, as Inshuti rightly said, our own currency needs to be in a digital form. So it makes it easier to have one currency that represents all the different currencies. I'm sure we'll have an agreement on exchange rates that will align, that we have one African digital currency. But we need to start from our respective countries. So Ghana has started, we are now encouraging the likes of you to have CD stablecoins. Rwanda will probably do the same thing. There's ECD, there's going to be other CBDCs. So I believe digital currency and the technology behind it will allow us to be able to do this faster than what ECHO they tried to do with ECHO. I hope I'm clear.
So, but the protocol on digital trade, every country can have their digital currency, but they must become one continental currency that is truly going to remove that third currency. So I trust that when the AfCFTA comes into force, that digital currency is on its way, but the innovations that are being led by the Bank of Ghana and Oracle and his team, particularly on the digital currency pilots that we're seeing, we will get there. So have some faith. I imagine that passion will turn into reality. Thank you so much, everyone, and thank you. Thank you, panelists.
Thank you very much. Please, let's step forward for a group photograph. Please, a round of applause for the panelists one more time. Please, a round of applause as they step off the stage. Okay. I know that was a very interesting conversation, and I know if we had left our distinguished panelists, they could speak on this topic all day long. I think one of the biggest takeaways for me is the fact that PAPS is now active in 21 countries as of today. And looking at the rate at which they've grown in terms of the transactions that they process, 1,500% increment is massive. And this shows that the opportunity is quite massive across the continent for cross-border trade. One of the unique things about Africa is the fact that remittances are one of our largest financial inflows, yet they remain among the most expensive globally. Our next session is going to speak to this and see how we can address the persistent gap between the possibilities that technology enables and the market reality. Our next panel is the cross-border remittances, reducing costs and increasing speed. Please join me in welcoming our distinguished panelists, starting with Kwame Afo, who is the founding director, Pay Financial. A round of applause for him as he steps on stage. Welcome. Next, we have Nana Araba Aban, who is the founder and chief executive officer, Coach U. A round of applause for her, please. Next, we would have Nikolai Eddy, who is the co-founder and chief operating officer, NALA. Please, a round of applause for him. And the last but not the least, we would have Emmanuel Babalola, the chief commercial officer, FINCRA. Please, a round of applause for him as he steps on stage. Our moderator is Matthew Rizzi, who is the founder, Time Pledge, and senior advisor, GFTN. Please, a round of applause for him.
Good afternoon, all of you. So, brace up, because I decided that this one is going to be a very controversial one. Please, a second.
Sorry, please, if you are the owner of the vehicle with plate number LR4GS2723, you are obstructing someone else. Please, could you repark? Thank you.
Can I go? They stopped us in our motion when I was about to say that in this conversation, we will allow conflicts, always for the greater good and controversial opinions. Why are we having a debate on cross-border remittances? Is because they are still expensive, there are still a lot of players, it's an enormous business in the continent, and I think that we have, with all due respect, 4 titans of the business in this panel, and I will allow a minute each to explain why. Maybe, Kwame, you want to start?
Sure. Hello, everyone. Good afternoon. I'm Kwame Afo. I'm the managing director of Pay Financial. We invest in, venture build, and orchestrate partnerships in the payment space and cross-border space. We've been investing in the fintech industry for about 15 years now. And we've also built a few interesting companies in the space, in the credit infrastructure space, in the payments infrastructure space, as well as the FX infrastructure space.
Thank you. Nana.
I'm Nana.
Nana Araba Aban. I'm the founder and CEO of iCoach, an executive coaching practice. However, a banker of 31 years went off ramp last August. But in my career as a banker, I did a huge amount with fintechs, a lot of focus on payments and ensuring that the last mile experience is next to none. A lot of work in retail, in payments, in wealth management. Yeah, I think that we'll be able to have a good conversation on the subject. Thank you.
Thank you, Nico.
Good afternoon, everybody. My name is Nikolai Frimpong. I'm based in Kenya, and I'm building a company called Nala. Nala is a consumer remittance company that sends money from the UK, Europe, USA into 15 countries on the African continent, as well as 4 countries in Asia. Underneath Nala, there's an infrastructure layer that exists that powers the remittances. And this infrastructure layer we call Rafiki. So Rafiki offers APIs that allows other businesses like MoneyGram, Western Union, or other remittance companies to plug into our APIs, do payouts, as well as foreign exchange. That's our business.
Thank you, Babs.
Hi everyone. This is Emmanuel Babalola. Spent the past decade driving crypto adoption on the continent. Spent 6 years as head of Binance Africa and built 2 startups where I exited as co-founder. Today I'm building Fincra, and Fincra is a cross-border payment infrastructure for Africa. We are the largest issuer of accounts, local currency accounts on the continent. This is, Naira, GHS, KS, UGX, and about 10 African currencies. And also we're the first African fintech to issue FCY accounts for African businesses. The whole idea is we're helping African businesses collect payments across Africa and across the globe, and helping them make payments across Africa and across the globe. And this is basically what we do today in FinCraft.
Thank you. First topic of conversation. Let's start with the provocative sentence. Remittances are not broken. They're just engineered that way. So I would like you to go for or against the fact that today startups and innovation are not really disrupting the business truly. They are simply lipstick on a pig, as we say in many countries. They are simply make the UI better, but there is no profound innovation. Now, we have 25 minutes, so let's make it snappy, okay? Go, Babs.
Yeah, so I'm speaking against, so it's broken, right? So why is it broken? It's broken for a lot of reasons. Because if you think about like all the different parts, of course, there's the compliance part, there's the infrastructure part, there's the liquidity part, all right? And of course, there's the operations. Today, the key thing is innovation, right? Has innovation improved over time? The answer is no, right? Because even though there is innovation, a lot of this innovation for, I think, the better part of the last decade hasn't really been, at the forefront of the conversation. Of course, things are changing, with, virtual currencies becoming an acceptable conversation to have in these kind of stages, right? So we've seen innovation around stable coins and digital currencies for quite some time, right? But these conversations are now being had today. So it means that we have a bigger opportunity today to unlock the innovation mainstream, the one that has been lacking, the one that has been a business secret for businesses in Africa for the past decade, right? So I think that yes, it's broken, but there is so much that the regulation and the acceptance of digital currencies and stable coins will bring to the picture when it comes to remittances. And it may not also be the way you think it will happen.
Nico.
So I remember It was 2020. It was the height of COVID. And we were thinking, what do we do? We were sitting in Dar es Salaam in a living room, and we had an old product that we had at the time. It was a data product. And we were sitting there and we realized, you know what? We do not have product market fit. And this business is going to go under if we don't pivot. And then COVID took place. And during COVID, I remember us saying, you know what we want to do? We want to take a bet on cross-border payments because people won't be able to show up to shops anymore in the same way and touch cash. And our theory at the time, everybody told us, don't do it, don't do it. It's a crowded market, everybody's doing it. You know, it's a race to the bottom. And I remember sitting in the room and our thesis going in was, you know what? We won't be a traditional remittance company. We're going to be a business that focuses on purpose-driven remittances and allows individuals in the diaspora to make payments directly to the school for school fees or directly to the hospitals for hospital bills. Fast forward 2026, is that happening? It's not happening. So I want to be honest. What I see is, I see there still being gaps in the remittance space, but it's much of the same. There's not enough real innovation that's taking place, in my opinion. We, as Nala, as a remittance company, we've not pushed hard enough, I'll be honest. There's a lot more that we could have done to really live up to that vision. And I'm hoping that there will be people in this room, hopefully people on this stage, that will, you know, rise to the occasion, because that really solves true real-world issues that individuals face. So we're the first to say we've not fulfilled that vision yet.
If I may add a bit to it, my view is not actually whether it's broken. I think it was just designed for a different use case. If you look at the history of banking and how money moved, it was very much based on borders. And banks were set up as a place where I could say I had this much, she could say she had this much, and then the bank acted as an intermediary to exchange value. And it was not really set up for cross-border transactions. And even when cross-border transactions became a thing, if you study the history of things like SWIFT, it was for a different use case. It was really for a different time. Now, I think today, the internet has made the world smaller. And it has made it such that people want to trade seamlessly without borders as a restriction. So it's now the opportunity to design a new stack for that world. And I think it would have been premature to have done it earlier because it needed things like cloud computing, it needed things like stablecoins, blockchain technology, it needed a certain amount of innovation before you could actually make it a reality. But to Nico's point, it's now a reality. So the question then becomes, what is the appropriate design for the new world today? So I don't see it so much as, you know, what was there was broken. I just think it was built for a different time. And we have an opportunity to use what is available today to solve the problem in a different way.
And I totally agree with that. I wouldn't say it's broken. I would say it's perhaps outdated. There's a lot of innovation out there today that can be leveraged to make remittances smoother and a lot less costly than they are today. I think there's enough innovation to move beyond remittance being here is cash, go live your life, to remittance being transformed into wealth creation. So yes, I wouldn't say it's broken. I would say it's outdated in an ecosystem where there's a lot of innovation that fintechs and regulators should leverage to make remittances into the African continent a lot more impactful than they are today. I think we're about 56 billion at the last count, 2025. And this innovation, I think, can unlock an additional 50% of that, I'm quite sure.
Thank you, Nana. And actually, I want to double click on one specific aspect of the remittances, which is pricing. I suspect that a lot of profit in this business comes from FX, right? Now, how many of you in this room, when they actually make a wire transfer, know exactly whether or not they've been maybe ripped off or treated fairly in terms of FX? I have no idea. Would you agree? So why is that? Who benefits? Where does the money go? And I would start with, probably Nico and Babs in this order. because you guys are dealing with this transaction every day. So let's see if you can convince the room that they are treated fairly.
You know, foreign exchange in many markets across Africa and Asia does not trade the same way that G10, G20 currencies trade. You can't log into a Bloomberg terminal and know exactly on that particular day, what is the importer who's maybe based in Nigeria, what is the rate that they're getting for dollars? And on the flip side, you can't know what is the remittance company actually making. And I think that the system is designed that way because there's really, the money that's to be made is when there's lack of price discoverability and when there's lack of transparency. And there's no incentive from many of the players that are, operating. That's both remittance, that's as well as B2B companies, to really bring, that transparency to light, because that's essentially how money is made. I believe the only way to fight that is to have enough competition to naturally force prices to be low. And I remember when we got into this business in 2020 in Nigeria, we were making maybe 1% margin. Today, it's basis points. It's less than 10 basis points of FX in Nigeria. And that's just because the number of competitors that exist there, the number of FX brokers, the number of remittance companies, infrastructure companies, it's driven the price to zero. And that's great. That's great for the mission of the work and the ethos of what we're trying to accomplish. It's hard for business, but it's great for customers.
Babs, and then I want to know what the recovering banker is thinking about it.
Yeah, thank you so much. So just as Nicholas said, it's in the design, right? The two key issues, of course, are price discovery and the transparency, because of course there are multiple fees, right? There is the payout fee, there is the margin in the trade, there is the collection fee for you, the diasporan who is sending the money, right? And as he also said, there are multiple markets in Africa. So what do I mean? If you look at the West, where you have just one rate, there's just one price for GBP to USD, just one price, right? It's the mid-market rate. You can literally find it. So just to give you the reality of that price discovery. While in Africa, you have the interbank rates, which is the local, regulated rates, right? You have the offshore rates, which is the black market rates. You have the stable coin rates, which is another rate. You have the cash market rates, which is another rate. So it's very inefficient in design. Now, because of that dynamic, right, as I said, the only way to resolve it is when more players come in, right? And when there is more efficiency in the market, right? Inefficient markets introduce high margins, right? Where there's no liquidity in the market, the regulation is not, does not account for a lot of different components, then it just makes everything like inefficient. There are some markets where, due to regulation, you have, let's say, a website, that helps people, a remittance, an IMTO, that helps people send money back home somewhere in, the UK. They have to put a particular price on their websites by regulation, right? So it means they can't give you a better price to send money home. Not because they can't give it to you, not because they don't want to give it to you, but because they can't give it to you, right? And so that's also another component of this thing. So I think it's really a design issue, right, that can be resolved.
So competitive wholesale FX is really crucial. And I think that the players in this room, we need to agree on making availability to competitive wholesale FX to actually start reducing the spreads that we're seeing on FX. But beyond that, I think players should start looking beyond remittance for a fee and start looking at remittance to wealth. And what is this remittance to wealth? Open it up into insurance, into investment opportunities, into savings. And there are fee or income opportunities with partners in the ecosystem, so that the burden, the fee burden on the remittance can actually be realistically reduced from a business viability perspective, and other opportunities explored and developed through the provision of other related products and services. And I think that there's a much bigger pie out there for players than just the remittance fee, which is predominantly FX.
Kwamena, actually, I had, and as a fellow investor, I know that not that you don't care really about FX prices, but is one of the many criteria that you might value when you look at the company. It is very hard today to find a conference where the word stablecoin is not associated to either payments or remittances, right? So, and I wanted just to give a slightly different angle for you to answer to the last question. How do you see the switch, in the teams and the potential, let's say, next investments that you guys are going to make, related to this fundamental change of infrastructure? Is pricing a component you're looking at when you think of putting the money?
Yeah, if I may kind of start from your first question and link it to this. When you think of why it's expensive today, I'll just walk you through a transaction. So today, if somebody wants to send money from the US here, their card provider, who they load onto the Nala app, for example, will take a fee for processing that transaction. Then, okay, maybe the US bank is kind there, so maybe they may not have a fee. Then Nala would then need to send it via SWIFT. Their intermediary bank and the receiving bank of the party receiving it will also take a fee. Then they will need to then change it into the local currency. There's an FX spread there. Then they would then receive it and then pay it out to the person who's meant to be receiving it. And they will also charge a fee. So if you look at the journey, 4 to 5 parties touch the transaction along the way. And everybody needs to be incentivized for doing that transaction. So that's why the fees are stacked. Now, what the infrastructure change does is that technically, because of blockchain technology, if currencies live on chain and can be exchanged directly, those 4 or 5 parties really can be reduced down to 2, right? Because actually, if Nala wants to buy, let's just say, for argument's sake, a digital city on chain, they can just actually buy that digital city from whoever is supplying it, and then they just deal with an off-ramp partner who would then move it to fiat. So it actually now just involves Nala and the third party, right? And then they add their FX rate, whatever it might be. So really what the stablecoin infrastructure should do is reduce the number of parties that have to touch the transaction. Today, because we are still on a regulatory journey to get clarity, there's still 4 to 5 parties that still touch the transaction today. And that means that the fee, and there's an arbitrage opportunity still there today, right? So that means that the fees haven't quite reflected, or the promise of stable coins being cheaper hasn't quite been reflected today. Having said that though, we're quite interested in companies that are rebuilding the stack, companies that are interested in simplifying the process and the number of parties it has to touch, and infrastructure companies that will specifically redesign the stack. But that takes patience, that takes a long-term mindset, that takes time for the regulation to adjust, and those are the things that we're kind of looking for.
Yeah, and I think on the point of reducing the number of players, we need to really start considering licensing a lot more of the off-rampers, as it were, in our various markets, because that is going to be key for trust. And therefore, regulators really need to look at how do we regulate the market better and license these off-rampers so that distributed ledger technology can really flourish and all parties get the benefits. And as I said, yes, there may be less fees along the chain, but there's a huge opportunity in the ecosystem for revenues, which could even be a lot more attractive than just the remittance.
You know what really weighs on my mind as a remittance company? You know, the finger is always pointed on, why is the remittance company making so much money? Or why is it so expensive to do remittances? Now, let me be honest. If we want to reduce remittances, we should be pointing the finger at Visa and MasterCard, because we know they're charging in the US, they charge us about 1.5% just to collect the money, 1.5%. We should also be pointing the finger at, I hope nobody's in here, the telcos. It's the telcos in a lot of the markets that charge very high fees for cross-border payments. So I'll give you an example. In Tanzania, our company was born in Tanzania. For a domestic payment, we pay a few cents. For an IMTO transaction direct with the telco, they charge $1. Now our median transaction size is about 50 bucks. So you can do the math on that. That's 2%. You know, and there's in FX, we're making basis points. So we have to cover, of course, but there's not money really coming to us. If we structurally want to change the way that this looks, we need to stop terminating directly into the telcos, and there needs to be more competition that springs up so that it naturally drives the price down. And I hope that will come about through stable coins. Think about non-custodial wallets, things like that we can talk about. But on the same note, we need to have some serious conversations with our friends over at Visa and MasterCard about, you know, what's allowed, you know? It's insane. 1% for what?
Anyone raising the hands? No? No Visa and or MasterCard? Just to spice up even a little bit more? Just, we are open, so if anyone wants to chip in.
I think I'll throw the challenge to the fintechs in the house. What can we develop as an alternative to Visa and MasterCard? So that's the question we need to answer so that they can be intermediated. But until then, it looks like the options are few and far between.
Yeah, the challenge is, you know, whoever has distribution has power, and Visa, MasterCard have distribution. So I get Nico saying, hey, what can be done there, right? Maybe, but you know, how does Visa, MasterCard know that's not a merchant payment versus if it's being used on an app for a transfer, right? So that, you know, if some dynamic pricing could be created around there, that would be a solution based on the use case. I actually think the stack just needs a redesign. And it might mean kind of being creative in how we engage with the incumbents in the space and actually talking to them about that redesign of that stack. But it's really hard. The existing stack was not built for cross-border. Let's be very clear. It was built for in-country payments and settlement in-country. And we patched that stack together to make a cross-border transaction. So you're gonna always touch 5 to 7 players who, they don't really care that you're using it for cross-border. They're like, here's my price, you know? So to Nico's example, you add the 1.5%, you add the $1, which is about 2-point-something%, you're already at 4%. Before Nico adds his fee. Now, since he's a good Samaritan, he's just doing a few bibs. But then, you know, the payout partner will also charge. So that's kind of what happens.
And I think perhaps, I'm not sure, but the API call, is it calling Visa, MasterCard as cash or as a merchant? Cash is more expensive, but if you call as a merchant, perhaps the 1.5 may come to 1.0, 0.9. So, you know, a little innovation perhaps could help, but here we are.
Yeah, just to reemphasize, I think the point Kwamina made is so profound. It's possible because, of course, launching a card scheme from Africa, it's powerful. And I think we have guys like Verve and some other players who have African card schemes in different regions. Now, but the challenge is the sender side, right? Literally in the US, right? In the UK. So if there's a way to get Visa to, you know, identify, because also has to be engagement by the diasporans there to say Visa, like we are sending money to our moms and our dads, you know, back home. You know, these transactions, you know, should be discounted for X and Y reasons. So I think that's a way to maybe approach solving that problem.
So I really would like to at least, you know, talk about 3 out of 4 topics. That's why I'm moving to. So we talked about infrastructure, then we talk about pricing. Let's talk about behavior, okay? So, and it's actually when I was cooking the question, I said, well, I haven't heard a lot about this topic, but especially cross-border remittances, they look transactional. Most of the time, they are, for an emergency purposes or for an emergency payment or for support, of course, but very rarely they actually build wealth. They build wealth momentarily, but they are not engineered or not used in a way that can build sustainable wealth over time. Now, it's a lot about, of course, like emergencies in some cases, but how can we engineer this business in a way that becomes a true support, for long-term growth? Nana, you wanna?
Okay, so I mean, there are some solutions out there already. I think On Afrique might be in the house, did something with inclusivity, where they actually bundle the remittance with insurance. And the thinking behind it is a lot of remittances are towards expenditure. And for 5 remittances said for expenditure, 1 is for an emergency. Now, so if you build in an insurance component that cushions the beneficiary in the event of an emergency, then you actually are solving a longer term challenge. So there are such solutions out there. I know that the African Union, there are some interventions to look at how remittances can be bundled into investments for, say, diaspora bonds, so that those in the diaspora who send money down can actually use a portion of it to invest in a financial instrument. So there are pockets of interventions, but clearly there's a lot more to be done. And this is where I was talking about remittances. Then that just doesn't become a fee-based, proposition, but it's actually a wealth creation proposition, a security creating proposition, a longer term investment proposition. So I think that for the fintechs in the house, there are opportunities which I am very confident the consumer will embrace.
I want to tell a small little story that touches on that. So in 2021, we launched the US into the African continent for payments. So allowing US-based individuals to send money. And we had this giant launch event where the president of Tanzania actually was doing a tour through the United States, and she was open to doing a joint conference with us. And so during that conference, we got to meet a lot of Tanzanians who are based in the DMV area. That's in the Washington, DC. And I remember one of the ladies come up to me and tell me about how for the past 4 years, she hadn't been home, but she was sending money home to her brother who was building her house. And she was getting photos, every month of seeing the house go up, the next story get taller, and she was very excited to go home. So 4 years later, she booked a plane ticket. She landed in Dar es Salaam. She got a taxi and she drove into the village. And guess what? Her neighbor had the most beautiful home and she had nothing. That money was used for something else. And this is where I see there being a huge opportunity. I think there is an opportunity to really build wealth, but when we talk about moving money, it's all about trust. How do you build trust? And the opportunity that I see is, what are the products and solutions that businesses across the African continent can do to help solve that? How can I, as Nala, plug into one of your solutions that will guarantee to ensure that that money actually reached the builder who was supposed to build that lady's home? How can I guarantee that I can plug into one of your products to ensure that someone's daughter or grandson or niece is actually going to have school fees paid for? So there's a huge unlock there and a massive opportunity that I think will go to really benefit individuals around the world.
If I may add one quick statement, for me, if I can make one pitch, and there's a lot of regulators in this room and people who are involved in what's happening. I think the way that money moves is being redesigned for the first time in probably 100 years. And there's an opportunity for African currencies to also be part of their own redesign and their own repositioning. And I'm a big kind of supporter of local stablecoins and what that will do for actually empowering African currencies. So what we're trying to do as a group is engage with regulators and talk to them about how this redesign of, right now the most predominant stablecoin is a dollar stablecoin, but there should be city stablecoins, there should be Naira stablecoins, there should be KES stablecoins, there should be ZAR stablecoins, and we can position how we deal with our currencies at a global level. And I think that will do more to liberate our currencies and strengthen our economies in a really amazing way. So that would be my main thing I would say.
Support everything you just said right now.
And I think there is no better way to wrap up this panel. You did it in a much better way than I would have ever done. Thank you very much for this conversation. A big applause to the speaker.
All right, thank you very much. And I think all the panel members, you've done a good job. Looking at the evolution of digital financing, during those times when banking was predominant when it comes to movement of funds, we had what we call letter of credit. Merchants or businesses were entrusting their finances in the care of banks until services are delivered. Payments were not done. And I'm thinking that where fintech has gotten to, it is not different from traditionally what was being done before. All that we are doing today is putting another layer, making life easy digitally. There is something that I think we are not doing right. Still, the trust component is what we are all talking about. We should try and introduce some of these escrow services, some of these LC services in the line of our digital, transactions, where if a business thinks that like what you shared, a relative sends money, at the end of the day, the service is not delivered, but money has been sent. Assuming there was an escrow service in between, you'll be able to lock, the digital funds somewhere. There should be evidence to what the funds are supposed to be delivered for. When those evidence are provided, monies are released. So I'm thinking we shouldn't let go the concept of the traditional way of what we were doing before. We should try and import some of these concepts, and I'm sure, digitally will be fine to go. Thank you very much.
Thank you. I think that's a very perfect, concept. Basically, whatever we have from the traditional time where we have letter of credits, these are innovations we can introduce to these flows. And I think that makes sense. Thank you so much.
Thank you. So that's the time to wrap up the panel. Thank you very much.
Thank you very much. Please just step forward for a group photograph. Please, a round of applause again for the panelists for a very insightful conversation. All right. Please, a round of applause for them once again. I think one thing that is striking from this conversation that was just wrapped up is the fact that opportunities exist for builders within the ecosystem, and not just for builders, opportunities exist for regulators to come in and be able to co-create with the innovators that we have on the continent for us to have the shared prosperity that we so crave. For our next panel session, our focus would be on liquidity and FX in Africa, the backbone of cross-border payments, which is really a continuation of the conversation that we just concluded. Please join me in inviting our distinguished panelists, starting with Andrea Petrolati, who is the Chief of Product ECHO. A round of applause for her, please. Sorry, for him. Next is Gillian Darko, the Group Vice President of Strategy, Yellow Card. Please, a round of applause for her as she walks. Next is the Country Director on Afric Ghana Limited, Ike Anison. And finally, we would have the Chief Executive Officer, Nsano, in the person of Priscilla Anoa Ezo. Please, a round of applause for her. And our moderator for this session is the Chief Finance Officer, GhIPSS, in the person of Eunice Nyadu.
Thank you very much, everyone. Thank you for waiting. When you go for conferences like this and people wait to listen to you, it's a good thing. So thank you for staying behind to listen to our all-important conversation. We have heard a lot, especially from the previous panel, and we will take our conversation up from there. Before we delve into the liquidity, cross-border liquidity, and Forex, we'll take the opportunity to have further introduction for the panel members. I met Andrea briefly. He's asked and said a few things, but I want him to introduce himself to you, the audience. Gillian, I haven't met, but I read a fantastic article of hers in one of the newspapers last week, and I couldn't wait to see you today. So nice to see you introduce yourself as well. Ina, same for you, Ina. Ike, sorry. Ike from Honor Africa. Sorry about that. I'm changing your name. And my good old friend, Priscilla. Okay, so we start from Andrea. Andrea. Can you introduce yourself to the panel, to the audience, and what you do?
Yeah, sure. Good evening to everyone. So I'm Andrea Petrolati, Chief of Product at Ercol. Just what's Ercol in a nutshell? We are a stablecoin Forex liquidity provider that works across emerging markets and developed markets, trying to bring instant settlement and best price execution for institutional clients. Thank you.
Okay, thank you. Gillian?
Yes. Hi, everyone. My name is Gillian Darko. I'm the Group Vice President of Strategy at Yellow Card. And what we do at Yellow Card is we're currently in 20 African countries. We've expanded into Latin, Asia, and the Middle East. We're focused on providing infrastructure in a sense where it allows you to simplify cross-border payments. And the article that Eunice was talking about is currently in the Business and Financial Times. I'm going to shamelessly plug my article, so please read it. It's on African banks, stablecoins, and cross-border payments.
Thank you. Good afternoon. My name is Ike Anderson. I'm with AnAfrique. AnAfrique is one of the largest payment aggregators on the continent. In essence, we enable money to move from one place to the other. That's our core business. We're connected to about 1,000 or 1 billion mobile wallets. So if you want to do business in Africa, which is predominantly mobile money, I think you need to talk to AnAfrique. Thank you.
Hi, good afternoon, everyone. I'm Priscilla Hazel. I'm the CEO of Insano. Insano is a payment service provider, and what we do is we process transactions in 30 markets in Africa, both collections and disbursements. So if you're a business and wants to process transactions across markets, we'll give you a single API to be able to access disbursements and collection APIs across these markets. Yeah.
Thank you very much. Okay. Liquidity and Forex in Africa is a huge challenge, despite the conversations that have gone on before us, that the rails are being built and constantly being upgraded. However, we're not able to meet the targets of speed, efficiency, and so on and so forth. I'll read some of the targets, a few of the targets for you. That should also spur you on to read Gillian's article. The targets are interesting, and it's a stretch goal if you look at what the world is looking at in terms of what liquidity availability should be when you say you're doing a transfer, what the speed should be, even the transparency and the efficiency of that transfer. They all have benchmarks. Costs have been spoken about by the previous panel. Cost today, Africa is one of the highest globally in terms of cross-border Forex transfers. The SDGs are targeting 3%. SEPA and the like, where Andrea comes from, they're in the 1% zone. Africa is about 8% costs. So our efficiency is not quite there yet. If you look at settlement time, real time should be under a minute with no issues. Near real time under an hour. And we're talking cross-border, not local or domestic payments. And if you look at liquidity, the speed that is acceptable is 100%. 100%, you can only be able to transfer in a minute if every transaction that you're doing is fully backed. Yeah. Today, how do we experience transactions on our continent? I'll start with Andrea, not because we just met, but from a product and infrastructure standpoint, why is Forex still the biggest constraint in cross-border payments? Why is that so?
Yeah. Thank you for the question. So I think the panelists need to be focused on liquidity, and I want to stress the liquidity side. But before starting on the liquidity side, I would like to retake a concept from the previous panel that we listened all together. The point is that on the infrastructure and tech perspective, there is a patch of old system that among the time we put all together, and they are not used, they are not designed for the global trade. So of course there is even a tech component that is affecting the overall efficiency of the cross-border payments that is made by legacy system, the core banking and legacy system that moreover in a continent, in a region like Africa, they are really different because they come from different legacy system from region by region, right? So this is a tech aspect that I don't want really to touch here now. Maybe we can touch base it later. But yes, the focus should be on the liquidity, even because actually liquidity is the backbone of cross-border payments. So the reason why there is inefficiency still on pricing, on effectiveness of the service is due to liquidity crunch. And the liquidity crunch, speaking about African markets, I think there are, even based on our empirical experience we have here in ERCOL, there are three main vertical to be touched. The first one is a more geopolitical one. So you were speaking about SEPA and SEPA network. So what SEPA is a banking settlement network that is instant in 24 countries in Europe. So you can imagine that just with this simple concept, we can settle very fast to every merchant, to every banks in 24 countries. And this allows us, of course, to reduce the barriers to settle payments in any kind of vertical. It can be cross-border payments or local payments. While in Africa, there is this geopolitical issue. That is not an issue, it is what it is, no? So there are 50 countries with different local payments network that are not really well connected. And there is no sovereign entity that is a clearinghouse that allows to accept the local currency. So no one wants to be exposed to the risk on holding the local currency of the other country. So this is a geopolitical aspect. Then there is a banking infrastructure that is part of the service itself, and there is still strong dependencies on our currency and correspondent banking. Why those things are correlated? Because our currency are very important for African markets right now, because you can only go synthetic when you settle transaction between countries to two countries here in Africa. Why that? Not because we love Europe or we love US, just because if you go synthetics, the price is lower and the transaction ends up in a cheaper way, so the global trade is facilitated. But this is a strong dependencies and is not without cost. Why that? Because in order to have this hard currency, you need to have a correspondent bank account on the other side. And correspondent bank account need to have a certain liquidity stored in this bank account that has a specific cost that will affect the forex cost itself. So this is, of course, is a bank infrastructure need to be redesigned, because the capital inefficiency you have within the correspondent banking is very strong. It is affecting a lot the cross-border payments and the liquidity itself. Now, here there is a point. Cross-border correspondent banking network is not bad. Is a matter of trust, right? So we should recreate. Maybe we can speak even later on the solution. We can recreate with a settlement layer the same level of trust by transferring funds instantly instead of holding the funds on the other bank on the other side of the corridor, because this give capital efficiency, of course, and even no idle capacity for a demand increase. Last point is the liquidity crunch. The liquidity crunch comes from two main issues. The first one is market volatility. We all suffer market volatility. So the price of the cross-border payments is affected by volatility of every single market in the countries. So of course, you want to be pre-funded because you don't want to be exposed to the risk to close the transaction, to close the trade and hedge your trade as a financial institution the day after, right? And last thing is the lack of liquidity in the banking system, no? Because and when I speak about liquidity, unfortunately, as of today, we speak about dollars liquidity. And dollar liquidity that every bank has is affecting the capacity that the banks can give in order to execute Forex. And this affect cash repatriation and affect a lot the global trade of the enterprise. They need to delay the payout of the supplier, so they are affecting in their business itself, even on different industry verticals.
Thank you. Thank you. Gillian, Andrew has explained that a lot of the banks don't have liquidity backing the transaction, and hence the delays, so some of the delays or the challenges that we're having. We can see stable coins getting into that space to make up for some of the challenges that fiat currency is currently having. Can you throw more light on how we're using stable coins to address those issues?
Okay, not a problem at all. I think one of the things that we need to address first, again, is going a little bit more into the problem statement. So Eunice, you mentioned that firstly, we have a fragmented ecosystem, liquidity constraints. He's touched on a number of them as well. We are actually using stable coins right now on this continent. And one thing that I need to address here is that when it comes to Africa, stablecoin traction and usage is top in terms of many of the continents here. I also want to take you on a journey. So when Yellow Card started, we started in 2019. Now, what was happening in 2019 in Nigeria? We had massive currency depreciation. There was aspects of not getting liquidity as well. Nigeria, given its massive population and obviously its youth, what then happened is they utilized stablecoin, whether it was USDC or USDT, obviously backed on fiat USD stablecoin, to be able to hedge against the volatility in the market and store their value. What we are now seeing is you've got corporate institutions, you've got banks that are focused on now, how do I now use stablecoins, especially where you have liquidity constraints in this market? I spend the majority of my time speaking to banks, talking to them about ways in which to build a stablecoin strategy. So these are things that we're working on. And one thing that I also want to highlight is, obviously, I'm focused on revenue, but making sure that we have compliant products. The reason why we're looking at stablecoins for cross-border payments is, apart from what I just highlighted, the liquidity aspects, the FX components that we're talking about, it's also the fact that it is quicker. In the normal flow of funds that you have, if you are a corporate institution, if you are a bank and you need to make a cross-border payment, the traditional flow of funds is you have to hold in local currency, and then obviously you're going through the corresponding banks, then it's you have a Nostro, a Vostro account. All of that has layers of complexity and the cost. In the previous panel, we saw all the costs that were discussed as well. So when it comes to cross-border payments, we're trying to simplify it, obviously bringing it into a system that is regulated and making it much more cost-effective. I also want to give you some nuggets of data, and it's also in my article, so go and read it. So it says that the reason this is gathering momentum is that the cross-border payments opportunity is massive. The total addressable market stood at 194.6 trillion in 2024, and its forecast is to reach 320 trillion by 2030. Now, stablecoin usage, the fact that in Africa we are running, Nigeria being number 1 according to the chain analysis report, Ghana is top 6. Also adding to the fact that last year we ended up with stablecoin on-chain market cap at around 250 billion. Now Q1 2026, we're now at 300 billion. Citigroup reports highlights that stablecoin market cap is going to grow to about 4 trillion. So this is an amazing technology, it's an amazing ecosystem. But where we will later talk about this is the regulatory environment to ensure that these products are obviously protecting the consumers and are actually as efficient as they should be.
Thank you very much, Gillian. Ike, on the back of what Gillian just said, and with your experience running infrastructure across multiple markets in Africa, can you let us know what the most common liquidity bottlenecks are that you have seen, and how do you address them from the perspective of AfCFTA?
Thanks. So we're in about 43 markets. So imagine you need to move money across all those markets. So what happens is you'll have a situation where in some markets you have liquidity and in others you don't have liquidity. So that's just by nature of the flows, right? Now, secondly, how do I move money from where I have excess to where I don't have it? So that's where she's talking about things like stable coins, that actually facilitate that. The other challenge is that if I am long in a currency in another place and I don't have any use for it, how do I offload it without losing money? And that's where the FX comes in. Because if I want to sell it and there are no buyers, they're going to come at a lower rate. So for us, it's really about making sure that we can manage the liquidity to the positions where it's most needed. So it's simple but complex because it has a lot of juggling that needs to be done. So our treasury team is really, they're always, under pressure to make sure that they're providing liquidity where it's needed and at the time that it's needed as well. Because, if you don't have liquidity there, then suddenly that instant payout doesn't happen instantly, So that's what I would say. Yeah.
Thank you. Thank you, Ike. Will we get there from a payment service provider point of view? How can we use payment services to improve on liquidity?
From a payment service provider point of view, how can we use payment service to improve on liquidity? I think I'll take it from the point of FX, and since we're talking about cross-border. Now, if you think about it deeply, and when you think about FX and even FX volatility is a hidden tax that all of us pay for, but no one intentionally discloses it. We pay for it one way or the other. So for us as Insano, we are in Ghana and we don't directly deal with FX. We have partners, whether it's remittance companies, international companies that deal in FX and will deal with the bank, get a rate from the bank. So technically, when you think about it, the liquidity from these partners is given by the bank. We receive the funds and then we process. Now, what tends to happen when it comes to liquidity is when you operate in different markets, for instance, as in Insano, as we operate in Kenya, we operate in Ghana, we operate in Cote d'Ivoire, you have funding needs. You can have a partner in the UK who would say they want to send money to about 3,000 wallets across these 3 markets. And as a partner, like Ike said, you have to think about how to make sure you have money in all these different markets. What we tend to do is, if a partner wants money to hit on the same day, they'll send the money, but sometimes because of delays, the money doesn't come on time. What you tend to do is you partner with banks to sort of get some sort of pre-funding to be able to offer the service. That's one of the things we do. But bear in mind that this pre-funding comes at a cost, and usually that cost is transferred to the customer one way or the other in order for businesses to be able to sustain themselves. So there's a way to solve it where we use pre-funding, but it always comes at a cost to the customer. And when we talk about costs, when we talk about costs, if you think deeply about it, the challenge is not the money. The challenge is having the money at the right place at the right time in the right currency. So for us as PSPs, typically what we tend to do is we partner with banks to be able to solve this challenge when it comes to liquidity by providing some sort of pre-fund services. That comes at a cost to us, and this cost is directly transferred to the customer and sometimes our partners. Yeah.
Thank you, Priscilla. I'll go back to Ike. That it is money at the right place at the right time in the quantities that will resolve this. That's what you said previously. Priscilla has iterated that. What else do we need to do to be able to meet the performance benchmarks, apart from money being there at the right time? Because it's not only the liquidity. Sometimes the liquidity is there, but the payment process is also not efficient. Can we do something about the payment process itself? What do we need to do?
I would want to maybe differ a little bit from that. I think today, the rails in terms of payments is messaging, right? I can send a message here to Timbuktu and to get in a second. So that's what it is to say, I use my phone to send you money. So that messaging layer has been achieved. I mean, her business and our business as well, we have people who we can send money to real time, near real time. So the payment process is quite flexible now, because in the past, you had to go to the bank to get paid. Okay, so we've taken that out of the bank. we put it on the mobile phone, okay? You can also go to an agent and get paid. So I think if you're saying the payment process is cumbersome, I'm not sure, you know, it's today it is, unless there's a different side that you're thinking of.
So, for instance, when a payment fails,
Yeah.
Payment is not a one-way street.
True,
okay, you
true.
send payment, when you're sending, it's okay, but when that payment experiences challenges, that is where you will know that
Okay,
process
okay,
is
so
not
okay,
as
no.
efficient. So how can we make that efficient?
So if we look at another type of payments, for example, card payments. I know a lot of people traveled here and they probably use their cards, but there is a unified system that, you know, governs that payment for cards. If a card fails, that's called a chargeback system, and it has a number of days that you can expect your money to be refunded. So I think as a body, as payment, you know, proponents, we need to have that kind of unified framework for reversals and refunds. I know that in Momo, you know, domestically, they have a system, but when it comes to cross-border, it's now somewhat left that, you know, each person or group's, you know, way of refunding it. So that's what needs to be harmonized, so that you know that if I'm doing a domestic transaction, it's 2 days for me to get my money, or it's the next day. If I'm doing a cross-border transaction, maximum it's 5 days. I think we need to get to that point where we can all, as industry players, agree that, you know, the banks, the telcos, the MNOs, us, that it will take this number of days, so that the client knows that, hey, look, once everything is okay, I will get my money back in X number of days. So it helps you to plan as well. So I think that's what we need to do.
Okay, thank you. Gillian. Stable coins. Will the Makola woman be able to accept stable coins? If so, from when?
Okay, so I love the fact that we are using a practical case, so the Makola woman. I'm going to take you on the fact that in Nigeria, stablecoin usage, critical adoption is actually #1, according to Chain Analysis Report. Just last year, when you look at the amount of on-chain transactions, you're looking at crossing across the 24 billion. So when we say, will that Makola woman be using it? I'm going to be very honest here that when it comes to digital currencies, that Makola woman is spoiled for choice. 10 years ago, financial inclusion was coming into it. She was understanding what mobile money is. She was understanding how to use that. She now has loans that she can pick up from Jumo. I actually used to work at Jumo as well. So now when you're looking at the Makola woman, she's like, which one is the best one for me? Because I know this technology here, I know that. So we're actually seeing this happening in real time. What is now also now moving into a different realm now is the B2B side. So to answer your question again, the Makola woman is far advanced. She's already using it in many places in Nigeria. We're in 20 African countries at the moment. It is expanding. They are utilizing it. They speak the technology. Africa is running. Everybody else is playing catch up.
You heard it at 3i. Africa is running stable coins. Andrea, your last words. How can we make Forex and liquidity, cross-border payments more efficient than we currently have? Your last words. We just have about 4 minutes to wrap up.
Yes, well, so the first answer, I think, from my side is try to bring all the settlement layer on chain via stablecoin. What is very important on this first solution is that there is cons, like everything, you know. So before we were speaking about correspondent banking and a USD dominance on the cross-border payments. Actually, stablecoin as of now is not solving this issue, guys. I mean, every stablecoin is USD denominated. You still have a correspondent in order to manage it. And if you want to source liquidity, you need to have a bank account there in order to exchange USD with USD tokenized. So stablecoin has showed a great efficiency on the settlement layer. So you can reduce, you can actually pool liquidity without pre-funding, and you can react to a spike of demand in cross-border payments without pre-funding. So this is good. So the technology is good, but it's not still solving the real issue. So before in the next panel, we were speaking about local stablecoin that can help in this sense to increase to reduce the settlement risk, of course, between African countries, but it's still not solving the liquidity, right? Because it's still fragmented. Yeah. Then there were someone speaking about the Pan-African stablecoin. This thing is a bit utopic in the sense that you need to create an arrangement, a trade agreement between all the African countries. It's something that is reachable, but we are not there yet. But of course, it's something to look at, no? An asset that is different to Euro, is different to USD, that can make Africa free by this other continent, and they can leverage on their productive engine. So it can be, I don't want to be too utopic, no? But you can make a stable coin that is a basket of different currencies, or can be even a commodity itself, since Africa is very rich of commodity. But this is a bit utopic. Like just to stay on the short term, I think that now there are a lot of liquidity players like Aircall, like Yellow Card, that work together and then bring solution to a market. But the real key is be able to orchestrate all the liquidity pool, because even this presence of a lot of players is creating a liquidity fragmentation in a private level. So it's not on the banking network, it's not on the geopolitical situation itself, it's even on the private network. So we should orchestrate all this private ecosystem in order to understand where is liquidity and to route the client's flow, either it is a remittance or import-export flow to the right liquidity pool that has capacity in the right moment that we need. I think this is a key on the cooperation between the parties.
Yeah. Thank you. More collaboration will address the liquidity challenges that we have. Gillian, your last words.
My last point.
Your last words on how we can address the liquidity and FX challenges that we have in cross-border payments.
Okay. I think for me, just leveraging on a number of things that he also just said, and which is, yes, stable coins, it assets, but there's still a number of things that we need to amend to actually get there. So if I'm looking in a crystal ball, let's say it's in 3 to 5 years, and I've looked back, what I would like to see is in terms of regulation, trust, and infrastructure. So with regulation, I want to be able to see there is an understanding across our markets. We are a fragmented continent. We have several different countries, several different currencies. And just again, remembering what Her Excellency, the VP said is we're not going to have the same regulation, but then they should actually be working together. They should complement each other. So that is the regulation there. When it comes to the infrastructure, leveraging everything that's been said on the panel, we need to build solutions that make sense for this continent. So we are at the starting point, but there's so much that still needs to be done. So when it comes to obviously the liquidity aspect, there's still a long journey to go. But again, what is the solution? What are we trying to solve for? Then it is about ensuring that if it is we're using stable coins to hedge against that volatility in the market, it's trying to solve the liquidity as well. We need to make sure that it's coming into a banking system. Telcos, it is properly regulated because that's the component of trust. So you heard at the start of this conference where we heard from the governor, we heard from the CEO of GhIPSS, trust, infrastructure, and regulation have to all work in collaboration in order to us to move to the next frontier.
Thank you. Ike.
Thanks. I'll take it from a different angle. I don't know how many of us know Mr. Bloomberg, right? You know Mr. Bloomberg? but he dictates how we see our currency, right? He doesn't even live on this planet, on this continent, sorry. But somebody tells us this is how much our currency is worth against another currency, and we take it verbatim. You know, everything we're saying here is fantastic, but as Africans, we need to get to a place where we can begin to determine what our own currencies are worth. Okay, we need to build systems. The fragmentation we're talking about is artificial, but we also need to decide, do we want to continue this way? You know, so there's no point in being the king of 10 people, right? We don't need all these silos, but the political will has to be there. PAPS is still having challenges convincing countries to sign. It's a no-brainer. But, you know, so that's the mentality level that we need to attack. The solutions are there. Others have done it. He talked about SIPA, right? You know, we're no different. You know, we want to move money around, but we need to just, you know, put aside some of our idiosyncrasies, our egos, and think African. How can we build a sustainable solution, the infrastructure that will make it so seamless? Like she's talking about the woman in Mokola who doesn't even know that it's stablecoin she's using because we've built it, you know, and everybody gets money when they need it. So I think it's really about the will for us to actually implement that kind of solution. That's what I would like to see. Thanks.
Thank you. The will to implement a type of solution, extremely important. Thank you. Priscilla, last but not the least.
Okay, I think I'll take it from where I took it. And because I'm in the payment space, I'll focus on payment. We are in an African continent, and we talk about cryptocurrencies, we talk about stable coins, we talk about payments. But if you think about it, ultimately, what we are really looking to do is to trade amongst ourselves as Africans. That's ultimately what we are trying to do. All these conversations is to allow us to trade. Now, we don't trade as much between ourselves, not because we don't want to, but we don't have the rails or the foundation or the infrastructure to do it as smoothly and efficiently as we want to do it. So for us as Insano, because we're a payment company, we realized that the first layer to enable us to be able to trade as Africans is to fix that foundational problem, which is going to be the rails, which is the payments. Money needs to be able to move for trade to happen. So if those rails are not built, there's no way anyone can build on top of that foundation, almost like you're building a house. You can't put in windows without having the foundation there. And I think this is what quite a number of us sitting on this panel are trying to do, build those rails for trade to be able to happen eventually between the different countries. Now, what does that rails mean? Rails can mean individual companies like Insano connecting to different payment services across the continent. It also means switches in each of the countries. In Ghana, we have GhIPSS that provided us with real-time processing. In other African markets that we operate in, they don't have any sort of real-time processing. So if you needed to do a trade or have a transaction happen, it can take you 3 or 4 days for you to get your money. We've gotten so used to it in Ghana where you can, at the click of a button, send money within seconds, the money hits somebody's bank account. But in quite a number of African countries, that problem has not even been solved. In order to send money to someone's account, it can take like 3 days for you to receive the money. So for us, the important thing is to build the foundation, make sure that we build the rails. One way is what most of us are doing. Even when we talk about stable coins, when you have to off-ramp from stable coins, it will go into a wallet, to go into a bank account. What are the foundations that have been built for us to be able to enable these innovations to be built? And ultimately, I think that's what we are all trying to do. And that's what I think companies like Insano and other PSPs are trying to do. Because without that foundation, you cannot build logistics on it, you cannot build deliveries on it, you cannot build all these other services that people are thinking about if the payment foundation has not been built. So I think that is the challenge to us as PSPs and as those sitting in this room and those on the panel, to help push for us to be able to enable payments to happen smoothly and efficiently between countries and within country in real time. Okay.
Thank you. I'm sure that we at 3i resolve that the silo mentality will cease henceforth, and we'll begin to trust each other as far as trade and payment systems are concerned. My name is Eunice Nyedu from GhIPSS. Thank you very much for your attention.
Thank you very much. Please, a round of applause for our distinguished panelists one more time. Could you please step forward, please? Thank you very much, our distinguished audience, for your patience. We're about to have our final panel session. But before we proceed, please, we would like everyone in the room to please come to the center so that we can have an intimate session as we wrap up our conversation for today. Please, let's just come to the center so it's also encouraging for our speakers. I think one thing is very clear at this point, based on all the conversations we've had since the beginning of the fireside chat and up until this very moment. The rails are being built and are constantly evolving as technology also evolves. However, fragmentation persists. And despite all the innovation that we've seen across the continent, cross-border finance has not yet materialized completely. This is why for our next panel session, our focus is on passporting and market access. How do we unlock cross-border scale for fintechs across Africa? This final session promises to be insightful and culminating based on all the conversations that we've had today. We have an exquisite lineup of titans of industries who are going to be gracing the stage. But before they are invited to come up, please can we move to the center of the room before the panel starts? Thank you. For the next panel, the first speaker I would be inviting on stage is Felix Darko, who is the country lead Paystack Ghana. Please, a round of applause for him as he makes his way to the stage. Please, can we keep clapping for him as he makes his way across? Next, we'll be having the Chief Operating Officer, PowerPay, in the person of Jamie Steele. Please, a round of applause for him. I also have the honor of inviting on stage the Senior Director, Regional, Social and Policy Research for GSMA, and the person of Kenechi Okeleke. I would also be inviting the Chief Executive Officer, Piazza Africa Limited, Sheyi Ebenezer. And our distinguished moderator for this panel session is the person of Jacqueline Juma, the Director, Advocacy and Capacity Development, Africa NENDA. Please, a round of applause for her.
Thank you, everybody. Good afternoon, distinguished panelists and our audience today. I think in the interest of time, I know we only have about 30 minutes for conversation, and then we'll set it up for questions. The conversation today is we're trying to answer a simple question, and the question is, how might we enable fintech licensing and passporting across Africa? Today in Africa, the time is ripe in terms of what we need to do to enable fintechs to scale across borders. We're thinking about enabling seamless cross-border retail digital payments, especially. And that also comes with supporting other continental goals. That is the AU Digital Transformation Strategy. We also have the AfCFTA and specifically the Digital Trade Protocol, operationalizing it, that is, to promote trade. We're also looking at other interventions because from a regulatory point of view, there's an ongoing conversation led by the African Ender Foundation, for instance, in terms of driving policy harmonization. How can we begin to look at some learnings from the PSD 123's journey in the EU region and applying the same to create seamless cross-border payments in Africa? And at the same time, we also have interventions from the private sector led like by the Africa Fintech Network, specifically on fintech licensing and seeing how this can be a success. But to the conversation today, I'd like us to focus on three things, looking at the examples of what is happening in the continent and seeing how this can be scaled. So very quickly, to get into our conversation today, I just want us to start with understanding some critical challenges. And I'll point out this question to you, Kelechi, because of the GSMA data reach research that is conducted annually. What do you think is the current regulatory and licensing landscape vision in terms of how it looks like from fintechs that want to expand beyond their home country? What, in your opinion, are the biggest frictions that slow this seamless cross-border payments agenda?
Thanks, Jacqueline, and hello, everyone. Pleasure to be with you today. There are quite a number of things that you can, point to that are slowing down the expansion of, fintechs across Africa. But since we're focusing on licensing and regulation, that is a major issue. For context, fintech is a consumer-facing business, and as we all know, for consumer-facing businesses, they rely a lot on scale. Okay, to drive efficiency, to drive profitability, which in itself brings about more investment and innovation. Africa, 1.3, 1.4 billion people, comparable to China and India. But these two countries, they are, Africa is a continent, are essentially one market. But when you come to Africa, you're looking at 54 markets. So what it means is that if you started your business in one country, going into another country means you have to get a local license in that country, and that comes with its own issues, from compliance issues to requirements, around local board of directors and so many things that add extra time and resources, cost resources, for fintechs. I think it was in February, one of the founders of Flutterwave mentioned that they are present in over 50 countries globally, which is good. But when you then consider that around 34 countries out of the 50 are in Africa, it then begins to drive home, the point that they've made so much effort to get licenses in many countries, yet many of those countries are in Africa. So if you think, that if this were to be one market and they didn't need to get licenses in all 34 countries, that may be a completely different story. And I'm sure, that for my colleagues here on the panel, they also have their own stories that they can speak to on that point.
Thank you very much. With that starting off, I think my next question will apply to Jamie, Shay, and Felix, and it has to do with looking at the recent developments or the emerging developments around the MOUs between Rwanda and Kenya and Rwanda and Ghana. How do you think this will pan out? Is this a big shift? And specifically, if I may start with Jamie, your question would be if you could share a concrete example of how differing licensing and regulatory requirements have slowed you down in terms of, venturing into additional markets.
Sorry, technical difficulties. Thanks for having me. Thanks, Jacqueline. So to your question on the different licensing regimes, they definitely slow us down. Like the fragmentation that exists on the continent, not just as different countries, but as different payment rails and different operators and financial institutions in those markets and across the continent. This is very real fragmentation and variability that exists out there. And we operate one kind of platform and one product to our merchants that has to be adapted to each of the individual markets that we operate in. Due large part, of course, consumer behavior and merchant demand, but the regulatory framework is definitely a huge contributor to that. So as we scale and as we have entered the 20 markets in the continent we're in, we've had to adapt. We've had to take a out of the box PowerPay instance and adapt it to the local realities of that market based on those regulations. What that means is, as we've sought to enter new markets, we're really slowed down. We're slowed down not just on the requirements of the market, but we're slowed down on the process that actually is involved in getting that license. Each of these central banks are, of course, public sector funded and under an incredible amount of pressure to govern the whole market. So PSP license applications is just one facet of their business. But as you enter a new market, as you have a different regulation to adapt to, and as you seek to build the trust that they need to have in you from day one, you're slowed down to enter the market and the opportunity cost of that. Despite having a product that's already quite innovative and is already used by merchants internationally and across the continent, we're just slowed on the ability of bringing the value of that into each of the markets that we're in. So the real impact is, or the real message for me is, there's definite fragmentation. The passporting is an exciting opportunity. I kind of wish it was there 5-6 years ago when we started out. But it's an exciting trend towards unified frameworks and speed to market and certainty for the PSPs.
Thank you for sharing in terms of what is contributing to the slowing down. If I may pivot to Shay, when you look at your merchant and partner base, how do these regulatory market access frictions show up in these businesses?
All right, thank you so much. The first conversation about passporting, taking our time to look at what the essential of these passporting. In my history of looking at it, number one, I found out that what is obtainable initially within the African context. If you look at the Central African, I think they started the passporting. If you have license, let's say in Cameroon, you can operate within the 8 countries. So the new development coming into play where Ghana is sitting at the center, kudos to the BOG team doing all of that. And then to just speak different from what my colleagues have spoken about, I think this passporting is going to aid a lot of inter-African trade in the sense that if you look at, for instance, the total market capitalization of Africa is about 1.5 trillion USD compared to the continent like Europe, which they just have a single license which they can operate within. So the total market cap is about 25 trillion USD. Compared to the one of the West, that's the US, running almost about 54 to 55 trillion USD in terms of market capitalization. So if we were able to do this passporting and then we're operating just on one side of the market, then the market capitalization, everyone is just going to converge. Where you see within Africa, we have 54 countries, and then we only have almost about 23 exchanges. So if you look at it from that perspective, those 23 exchanges compared to just NASDAQ trading almost 54 trillion, compared to what London Stock Exchange is trading almost 25 trillion. So if you look at 23 exchanges coming together, the limitation is just on that number of different regulators, different issues, so that's the limiting factor. So it's a future forward kind of process if we then put it all together and then grow this market to make it with just one continent and then one passport, just the way we're being perceived internationally.
Yes, and of course it has immense implications to liquidity and pooling of funds. So thank you very much for that. Over to you, Felix.
What's the question for me? Sorry.
Sorry, your experiences and the challenges when it comes to crossing from one country to the another.
Right. So of course, my purview is Ghana. So that's really where I want to win. But I think as Paystack, we currently have a footprint in about 7 African countries. Our approach has been more to go deep than to go broad and really win in a market, really understand the sort of nuances and mechanics that make that market tick. And then move into a new market when we're sure that we have, the right product market fit for that. Now, of course, that entire sort of research and development process, then the market entry, then the licensing is a lot of steps that takes a lot of time. And I think you made a very good point around sort of policy harmonization, because as much as we like to think of Africa as maybe sometimes a bit of a monolith, that we're all one people, and maybe sort of culturally there is that aspect, but ultimately we really are 54 completely distinct markets with completely distinct dynamics, consumer behaviors, so on and so forth, right? And so for us, really, like we how do I put this? It's important for us to really lay those inroads before we make that market entry. Now, when it comes to license passporting, I think it provides like a nice, easy market access. But I think that there's also some risks, as nice as it is for us PSBs that already have this footprint. I am, a bit concerned about what this might do for local players that are just starting to sort of build up their businesses, and then, a Paystack, a Payaza comes into the market, a PowerPay, what have you, and the smaller guys can't really compete. And so I think these are some of the things that these governments are really thinking about when it comes to license passporting and what the impacts on the local economy could be, in some countries versus others, right? Yeah.
Well said. Thank you very much. I think now, with having understood the different challenges that we all have come across, it's time to perhaps take a moment and have the power of the pen, assuming that we have the power to design a good framework for fintech licensing and passporting. And to start off, I'd throw this question to all of you, and feel free to answer as you wish. From a policy and regional integration perspective, how would you define a good passporting? What is good license passporting? What does that look like? We've seen the examples, but at this point, they're just MOUs. There's the bigger elephant in the room in terms of operationalizing this, ensuring that these frameworks actually work for the fintechs in Africa. What does that look like? Or what sort of priorities do you think these frameworks should be looking at when it comes to, enabling scale for the fintechs that we see? Jamie, you can go ahead.
Yeah.
Just feel free to chime in.
Obviously, I come at it from the operator lens. So we have a certain bias towards what makes life easier for us. But I think first and foremost, we have to say that the right regime that is there has the security of the consumer's funds absolutely watertight. So we have to take the best standards in whichever market we're choosing to passport or raising them further, so that the consumer is not in any way jeopardized by borrowing another market standards and suddenly the end consumer is penalized. The second thing, yeah, we have an MOU, Ghana and Rwanda, we're talking of Ghana and Kenya, but we're yet to see operationalizing of that. We're yet to see engagement with industry to any large extent on how should this work. Like when there is an issue from an operator in Rwanda using a Ghana license, how are the protocols and procedures around issue resolution and customer complaints and policy? How's all that handled? Which standards are being held up for KYC, AML, CFT? And just like really setting the thresholds with clear certainty. That's all, to be honest, that's all I really want. Of course, I want less capital requirements and less money tied up. But what we really want is certainty on how we will work under that framework and how we will collaborate with the central banks. Like, is it a body? Is it one or the other? We just look for that certainty and guidance so that we can get to market for the consumer and start to bring the value that well-licensed and well-governed PSP should.
Thank you. I think it's interesting you mentioned certainty, because we've had discussions with some fintechs on how gray the regulations are, in as much as they're, from a written perspective, it is clear. So it's good to hear this being iterated in these kinds of forums. Kelechi, you want to chime in?
I'll just build on the last point, Felix made. I think in the digital world today, what we call that is digital sovereignty. We're seeing a big trend towards digital sovereignty where governments are becoming, more, will I say, cautious about how they allow, digital service providers from elsewhere to dominate their markets. And yes, from discussions we've seen earlier today, we hear that political will is less of a problem now. Governments realize that this is the way to go. So that's less of a challenge now. But we can't ignore the fact that there are still tendencies towards governments wanting to protect, their own businesses, their own startups, and regulations might be one of the ways, to do that. But it shouldn't stop the trend towards passporting as we're seeing. And so to your question, I think something that should be part of this conversation should be partnerships, partnerships across board that will help spread that value. And when I say value, I'm not just talking about value for the end users, but value for the providers, across different markets. So if you have, a player from market A that's expanding rapidly across the continent, are there provisions and opportunities for them to partner with local players in markets they're going into, which then creates value for those local players and may help ease some of the concerns the governments may have around sovereignty. So that's one point. But very quickly, also building on the point Jimmy made now on security, I'm going to look at it from the perspective of trust deficit. There's a big trust deficit in Africa. You're a business, you come from country A, I'm not going to name any names now, but you come from country A and, you want to go into country B, they just want to scrutinize you, from head to toe to make sure, that you're who you say you are and all of that stuff. It comes from a whole lot of, legacy stereotypes and the rest. And unfortunately, it's affecting the business world today. So the question now becomes, how do we use frameworks like passporting to address the trust deficit that currently exists between African countries? And I think, building in mechanisms into such frameworks will be critical, for different countries, to accept that businesses that may have been registered elsewhere can operate within their markets without any concerns.
When you talk of mechanisms, what exactly, like examples of mechanisms, what do these look like?
Yeah, so for example, let's say, AML regulations, right? It would be good to have a minimum acceptable standard for AML regulations, and countries, should be willing to abide, by those mechanisms for, redress for consumers who may, have had issues with using those platforms. Are there mechanisms for consumer redress? Are there mechanisms in place to protect consumers? What are the consumer protection, standards that have been adopted by various countries? There should be, minimum standards that, different countries are willing, to abide by, and that, should be reciprocal and, give whatever assurances any jurisdiction may want regarding businesses that are coming to operate within their own jurisdiction.
Thank you very much. Felix, what do you think would make good frameworks or would operationalize what we're seeing?
Right. So I think Kelechi made a great point around trust, right? And trust is one of those things that's, really hard to build, but extremely easy to erode and to tear down. And, at the end of the day, even though we might be competitors, we're all entering the same market and we're sort of perceived in the same lens, especially when it comes now to passporting. We're now seen as the foreign PSPs, fintechs that are coming into the market. And so unfortunately, a bad apple can sort of spoil the bunch, right? And so there has been the incidence of maybe some fintechs that go into new countries and say we're live in wherever. But really, it's not even a skeleton crew. They don't have a single person on ground. If transactions are failing, there's no one to reach out to. There's no number to call. It's really just a thing to tick off a box and say we're live in X many countries, right? And again, unfortunately, that erodes the trust that consumers or businesses have. And for us at Paystack, we're obsessed with our customers, and our customers are businesses. We're business focused. And so for us, it's really important that, you know, any regime or framework will have some requirements for local on-ground support, having a presence beyond, again, just saying on your website that we are live in this country, I think is very important. Again, this means more like for us, we have to do more, right? But I think it's worth it to sort of maintain that trust and to ensure that these businesses or customers are getting exactly what they were promised.
Thank you. Shay, what's your opinion on that?
I'll just make it very brief. And the conversation is around the trust and the partnership. The usual question I ask when it comes to trust is, why do you think a thief have a bank account? The only reason is that he doesn't trust he or himself to keep the money, so he rather keep the money where it's safe. So trust is the bedrock of every conversation that we're just going to run if we are going to run a passporting entity. And then interestingly, he talks about partnership. Partnership is what we just need to look at because even though from the West, they see us as one. So, but when we come internally, then we see ourselves as 54. So that's one of the things we then need to just build a lot of partnership to build up that ecosystem. That's very, very important for us to do. So thank you.
I think we all unanimously agree to the trust deficit as well as the partnerships being critical in terms of driving this forward. But if we look at now on the other side, in terms of the biggest risks that we should pay attention to when it comes to, you know, passporting being enabled, should there be not enough coordination on consumer protection and supervision? How does this look like beyond the trust deficit? What other risks do we think we need to be paying attention to, and especially to champion that coordination?
I think you have to view the risk through, like, try and imagine what the outcome is. Like, okay, the risk of what? And the risk, when you look at the outcome, is that someone loses some of their hard-earned money through some spurious actor who has been able to operate in this market, but would not have been able to operate if passporting did not exist. So the only way that that happens is that either a market A has accepted the inferior standards of market B and has somehow not identified that and plugged it and stopped it, or the actor, the central banks who are putting together the passporting and putting together their approval mechanisms are not communicating and aligning well enough on making sure that there's tight governance on the standards that these people operate in market A take over to market B with them and operate in the same way. So a lot of it does come down to Felix's point around, like, the consumer, the redress mechanisms. What is there for the user to recover their funds? How seamless an operation is that? Because the last person that someone in Ghana wants to hear when some of their hard-earned CDs have been lost to our, Rwanda's license holder is, yeah, we'll get back to you in a few weeks because we're waiting on Rwanda resolving that issue. So it's probably the most relevant risk that I see as it pertains to payments, of course, which is what we do, but it's real. And therefore, like, alignment, governance procedures and governance standards between the two markets that are putting the passports in place, and collaboration with the industry, I go back to my earlier point, is so important to make sure that these risks don't materialize. Because the other scenario I said about market B allowing market A's inferior standards to govern, I don't see that that'll happen.
Yes, consumer redress, a complex endeavor. We're just looking at it from the complexities of implementing this at the national level, and now we're talking about the cross-border, so definitely a risk factor that needs to be considered. I see, Felix, you want to come in?
Yeah, so I think the potential scenario where I think, just like Jamie said, let's say a Ghanaian fintech in Rwanda does something, someone's money is missing, and they're now waiting for some response from Ghana. I think there's a risk. I'd like to, believe in Ghana. I think the fine folks at BOG are doing great work. But, as more jurisdictions come into the fold, there's a risk that the home jurisdiction will not hold accountable the party that has done wrong, right? And so I have done something that's lost somebody money in Rwanda, but I'm in Ghana and my regulator is not really holding my feet to the fire. And of course, then the Rwandese government doesn't really have much course of action really to take to be able to remedy that. So I think, again, putting in place things that enforce the resolution, let's say, of issues like this, I think is very important. And a lot of this is really the politics behind it and really the relationship between these two governments and how they're able to sort of like lobby to be able to hold these people accountable. So I think there's a risk there as well.
Yes, political will, the political economy, and of course the coherence of the regulators. If they do not trust each other, then it becomes complex.
I actually wanted to add,
Yes.
because you mentioned earlier about, I'm actually not sure who it was, about how in Europe, you set up one time and you can operate across the entire EU, right? Unfortunately, the AU in Ghana is not in any way sort of close to the sort of cohesion that the EU has. And if you even take it down a notch to like ECOWAS or some of the other regional organizations, again, that unity is just not as strong as it exists in the EU. And I think ECOWAS is maybe even one of the worst ones, unfortunately. I think the Francophone West Africans have it a bit better. So I think that before, like outside of passporting itself, I think there's a lot of systems and infrastructure that we need to build, fix, improve, so that the passporting itself can be more powerful, but also more secure.
You mentioned an important point in terms of we don't have the benefit of an African central bank. And so who should drive this? Is it the REX? Is it the AU? But good thing is that currently the AU is in collaboration with African and they're commissioning research on the feasibility of implementing harmonized framework. And one of the things that we're looking at is that how would licensing license passporting look like in the African context? Of course, looking at some lessons from the EU and the ASEAN perspectives. So it's not like we are completely stuck. There's at least some light at the end of the tunnel in terms of just appreciating what Africa could do in terms of direction. But the most important factor is what the practitioners themselves feel needs to go into the instrument in terms of determining the way forward. Shay, from your experience, what do you think would be the risks in that?
Now, the major focus should just be on, for us to come together as a Central African is going to be a very tough one. I mean, because everybody have their own regulatory framework. But I think one of the foremost things that happened is, I think we had Dangote was talking about what it takes for you to just do business within Africa. You need to get visas and all of those things. So, and then on the strength of that, he set up a team called the Vanguard team, as in got a lot of African in different products, and then chasing a particular purpose. I think what we're then going to do is to put ourselves together in different, forming a team, everyone understanding their role, that this is the future of Africa, so that we can then get a whole lot to put together for ourselves as a continent to present ourselves and then relax some necessary rule. We have this sanction process as well, that if you violate this rule, this is what you are going to tend to enjoy. So those are the things we just need to put in place.
Thank you very much. In the interest of time, I'd like to invite all of you to just give us your parting shot in what you think would be a non-negotiable in terms of implementing these emerging frameworks. That is, should we continue seeing the countries go bilaterally, or what would be the best endeavor in moving the continent forward? Your parting shot in what you feel, would make sense in terms of implementing fintech licensing, passporting.
For me,
It represents a bit of a watershed moment in that it's a real opportunity to change the way that licenses are issued and handled.
Non-negotiable, non-negotiable.
Non-negotiable. Yeah. So honestly, where I think the lowest hanging fruit and where most of the improvement can be made is on the process itself, the visibility, the timelines, the clarity, the guidelines and the support that you can get through that process. Often license applications are a bit of a black box, and you can engage the regulator proactively and really inform them about your business and all the kind of, high international standards that you might be bringing. But just the timeline, the clarity, the opaqueness, and the kind of length of time that can take is actually, for us, the most frustrating part of license applications. So a non-negotiable for me, as you reach this watershed moment and time to change, is like really implement some transparency and guidance around that would make everyone's life easier.
Yeah. Yeah, it just crossed my mind that we haven't used the I word on the panel, interoperability. When it comes to, to payments, fintech, that's always a key point to mention. And it just crossed my mind now that maybe one of the non-negotiable points. I was just thinking about the ASEAN QR code system. One of the biggest success factors is interoperability. Merchant interoperability, PSP interoperability, and so on. So maybe that is something that we should also begin to think about in Africa as we move in this direction, to ensure that these systems, are not walled gardens, but are interoperable and can be used, by merchants, by consumers across different networks, across different platforms, and that will obviously help with the scale that we're talking about.
Fantastic. Thank you.
I think for me, I'd say a level playing field, an environment or a framework that doesn't sort of put certain players at an advantage over others, just merely based on relationships or politics or what have you. I think that's very, very important because we know that Africa is a very relationship-driven market or environment, culture, what have you. And so this can sometimes sort of throw a monkey wrench into the works and prevent, certain players from being able to achieve what they're looking to. So baking into the framework something that, again, maintains that equal opportunity amongst players. Once you are able to fulfill the criteria, you're just as eligible as the biggest guys in the game, I think is very important.
Thank you.
And then
Last but not least.
Yeah. Trust, and then secondly, we build a strong corporate governance. All right.
Thank you. Ladies and gentlemen, I'm told we are out of time. I wish we had 1 hour for this conversation, but thank you very much again to the audience, to the panelists, and until next time on this topic, thank you.
Please, a round of applause for our panelists one more time. On behalf of the summit, I want to say a very big thank you to our distinguished panelists for a candid and grounded conversation. We opened this session today with Amara, a trader in Lagos, trying to pay our supplier here in Accra. And we close it knowing that the infrastructure to make that transaction seamless is live, real, and growing. But we also close it knowing that Amara probably cannot access it yet. The rails have been built, but the question remains, how quickly can we get them under the feet of the businesses that need them the most? Thank you very much, everyone, for staying, for listening, and for the work that continues after this room empties. Please enjoy the rest of the summit. Thank you very much.